elections, the macro view. It's all tying together, but second half structurally becomes a lot easier for these companies.
When I was back in my tie wearing days, I was a Hermes tie person. That was my go-to.
Super solid
brand. Yeah, solid. That's a Wall Street standard back in the day.
And then, you know, there's another thing that runs on this, because I'm going to, I think, be like really focusing on what happens on operations. Some of these companies have 40% margin down to 25% average across the sector. I think where we're getting a lot more of Asian, you know, Asian overall is around a third of the luxury market, and we're getting a lot more of that spend into Japan. And if you think about the translation of these big euro companies, euro-based companies, the yen being so weak has kind of given you an equivalent 1-to-1 euro to yen in terms of pricing, whereas if you were buying in China, in Hong Kong, you were getting 1.2, so the conversion was 1.2. So that also hits the top line in terms of value growth.
Yeah, back in the day. Hey, real quick, how about like Saudi Arabia, United Arab Emirates, Dubai, that part of the world? It seems like there's lots of cash there. Is that a big market for luxury?
If we bring it all together, it's probably moving towards 6 to 7%. So you would say it's one of the bigger or just above the biggest European contingent. But it's certainly growing. Huge amount of investment moving into there, more so money coming in from Russia, from different parts of Eastern Europe, from parts of Middle East, into where, you know, where they can't spend in particular areas. So there's a lot of infrastructure taking place and a lot of new joint ventures and others being written in those areas too, which I see as being strong over the next 3 to 5 years. Similarly, we'll be looking 5 years on India as well as an upcoming market.
All right, Deb, thanks so much for joining us. Deb Aiken, Bloomberg Intelligence, covers all the luxury brands for us. I'm looking on the Hermes site. Pre-pandemic, when I was wearing ties, $200 for Hermes tie. Now they're $260. So that's 5 years
not too
inflation.
bad.
No, and I think, and they last, you know, a fair amount of time. They're good, and you know, but that's, you know, but I'm just looking at the inflation because again, I was at 200. John's laughing.
I mean, I'm looking at Bruno Cucinelli, where you're going to pay $2 grand for a man cardigan. I mean, really? That just blows my tiny brain. I just don't get it.
Yeah, luxury. You know?
I'm not.
Go to Banana Republic. What?
This is like some special.
I don't know. Magic. Anyway, coming up, we're going to talk more about the state of commercial real estate with the principal managing partner over Trinity Investments.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, the trading day is still young, but the major averages, they have all turned around, turned higher. The tech sell-off looks like it's reversed for now, at least, after yesterday's just about, well over 2% slide. NVIDIA shares right now, they also have reversed the earlier losses that we saw today. Right now, well, they were up 1.1%. So much for this. NVIDIA shares now pairing some of the earlier gains up now just 0.2%. So stay tuned. It could turn around at any moment here. S&P 500, 26 points higher. That's up 0.5%, 54.53 on the index. The Dow Jones Industrial Average is up 310 points. That's a rise of 0.8%, 40,163 on the index. NASDAQ 100 up 25 points. That's up about 0.2% right now. And movement in the yield space as well after the GDP report. Two-year yield down just about 3 basis points. That's at 440.10. That is 6 basis points lower. That is at 422. The GDP report we saw this morning showing second quarter economic growth topping estimates running at a 2.8% annual pace. The data suggests demand is holding up even with the high interest rates at 2-decade highs. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
You know what I'm going to do this weekend? I'm going to memorize the map of Africa. The second time today, I had to go to Google to figure out, see where a country was. Today was Botswana.
Botswana.
I mean, I can do it in a weekend. All right, Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over there and check us out on the video side. One of the topics that Alex and I love to focus on, we think it's really important, is commercial real estate, the opportunities, the risks out there, and the risks are big time. We talk about that a lot. Today, we're going to focus on, I think, the hotel business, the hospitality business, the resort business. Great guest in our studio today, Sean Herring. He's a principal and managing partner at Trinity Investments. The office is in Honolulu, Los Angeles, London. I don't see Cleveland here. He's based in Miami, a good place to be with everybody else in financial services. Sean, thanks so much for coming into our studio here. Let's start with the pandemic, because your industry literally shut its doors, locked, and threw away the key here. Tell us about what happened in your business and maybe opportunities coming out.
Sure, thank you, and thank you so much for having me today. So I'd say the start of the pandemic was truly devastating. We typically own brand-managed hotels that are 400 rooms and larger, and typically in the Smile States of Florida, Texas, Arizona, California, Hawaii, Cabo. Nice. And we had to close all of these properties. And I've likened it to stopping a supertanker midstream trying to close these hotels. But we used that time to really complete renovation work, to accelerate repositioning of the assets. We also used that time to raise our first commingled fund, which was a GP fund, and became one of the largest, most active buyers of hotels in the U.S. during that time. I will say that all of these properties that were closed during the pandemic have come roaring back. They're now renovated. They're seeing incredible demand, having record month-over-month performance. So we've come out of it well, but it was scary at the start of the pandemic.
Do you foresee that kind of demand continuing? We've just been trying to figure out what that leisure travel budget winds up looking like for those that have budgets and for those that don't.
I just read a statistic today, Alex, that said that in June, luxury demand was up for hotels 9%. And I think there's a 2% decrease in demand for the economy segment. What we're seeing with the work from home phenomenon in the US is that every weekend is now a 3 or 4 day weekend. So people are traveling more. At the same time, with the companies having to shrink their office space, they can't hold offsites in their offices anymore. So they're holding more offsite meetings to bring their teams together in the types of hotels that we own. So we're seeing compression between the leisure traveler and these offsite group corporate type travelers. So it's baited well for our properties.
So if you wanted to go out and buy a property, or if you wanted to refinance a property today, will the bankers pick up your phone calls? I mean, are the banks lending here?
We've been fortunate. I'd say our business more and more relies on relationships. And fortunately for us, we have tremendous relationships in the lending market and in the private equity. A lot of our partners are large private equity funds. We've completed well over $2 billion of financings and refinancings over the last 11, 12 months. So we see it robust. There has been more of a shift towards CMBS or SASB loans, but we've had loans as large as 150 million all the way up to 750 million that we've been able to execute in the last 12 months.
And are you getting that from banks, or is it private credit? Like, where do you go for that?
So it's a mixture of SASB and then non-bank banks.
What is SASB? I'm sure I should know this, but
it's the CMBS market, so single asset, single borrower,
okay,
CMBS market. And so, yeah, that market is very active right now. We just refinanced our Diplomat Resort in Hollywood, Florida. It was a $575 million transaction about 2 months ago. We bought a resort for that Accor, which is a non-bank bank. They financed us in Scottsdale, Arizona. But it's all down to relationships.
You recently expanded into Europe. Tell us about that.
We're very excited about Europe. So Ryan Don, one of our partners, moved to London about a year ago, really at the request of some of our joint venture partners who wanted an operating partner like Trinity in Europe. We completed our first acquisition about 2 months ago. We bought the Park Hyatt Hotel in Zurich in partnership with Oaktree and UBS. And Ryan now has the core team of head of development, acquisitions, asset management, etc. So we're very excited about the prospects in Europe.
who are your competitors? Is that a really silly question?
We compete with all of the private equity funds, but they tend to be our joint venture partners as well. So we've done a lot of business with Oaktree, we've done a lot of business with Partners Group, with UBS, with Elliott Management, and so we partner with these groups. They rely on us for our in-house expertise. We have 45 professionals who live, breathe, and sleep hospitality. That's what they do. We're hospitality real estate experts. And fortunately, our competitors also collaborate with us.
What's a typical property that that screens well for you guys in terms of an acquisition? What do you guys really look for, whether it's size or location or capital structure? How do you screen that?
In the US, we typically focus on brand managed, so mainly Hilton, Marriott, or Hyatt. And we typically focus on properties that are 400 rooms and larger, that are more destination type properties. And these tend to be in Florida, Texas, Arizona, California, and Hawaii.
So you would own the property, but Hilton would manage it?
Correct.
Okay.
And we're so fortunate with the relationships we have with the brands who really trust us with the assets. And we also buy from the brands. So we've bought 3 assets from Hyatt as they've gone on an asset light strategy. So Zurich was one, Greenwich, Connecticut was another one, and then Indian Wells in California was a third one. But
So
again, I'm not hearing Cleveland here. I'm not hearing Des Moines.
Do you want to go to Des Moines?
I mean,
Stop. Of course we do.
We do. I mean, like, sure, but I mean, from what you're saying,
Don't
these
be
are sort
dissing
of.
these places.
I'm not dissing
You
the
just did.
places. I'm dissing the location for hotels. In that, if I'm going to go to a destination and I'm going to send a work trip or something, I'm not going to go to Des Moines. I'm going to go to a place where I can soak up sun and be in a pool and that kind of stuff.
Well, what we've learned is that you need multiple levers because things do happen like COVID that are unforeseen. So when you have one of these destination type properties, you have multiple levers between group, corporate, leisure, meeting space, etc., that you can play with to induce demand to the assets.
So are you guys net buyers today? Are you net sellers? Where are you?
Holding?
All of the above. We're definitely net buyers. I think we're going to see the debt market stabilize. While we've been successful in them, you do need a more robust debt market to induce buyers. I think the minute we see, hopefully, an interest rate cut, you'll see a lot of demand coming back into the market. So we do have assets that are approaching stabilization, and in the right conditions, we will sell.
Well, Alex and I often, when we talk about commercial real estate, we just think about here, the 3rd Avenue in Manhattan, and we're hearing from experts that when these things trade on the 3rd Avenue in Manhattan, they're B office kind of properties, 30, 40 cents on the dollar.
Yeah.
If you go out and make an acquisition today of a hotel, you're not getting a discount, are you? I mean, are these things trading at about where they were trading, or are they trading at a discount to pre-pandemic?
I would normally walk into a convention or a conference as the hotel guy, and you'd be sort of the afterthought in terms of an asset class for real estate. What we've proven coming out of COVID is that we've been able to stay ahead of inflation because you essentially reprice on a nightly basis. So you can reprice your rooms, your food and beverage. The other side is that we typically trade at wider cap rates. So if we're buying at a 7 cap and we're financing at an 8% all-in interest rate, there's slight negative leverage, and it's a value-add investment that we normally do, so we work our way into positive territory pretty quickly. If you're predicated on buying the other real estate asset classes at a 4% cap rate, which used to need a 3% interest rate to make it work, you're way underwater in terms of that spread between where the cap rates and the interest rates are now.
Interesting. Go ahead.
No, it's just fascinating stuff. There's so many different areas and little tranches and slices of the commercial real estate business.
Yeah, it is really interesting. Sean, thank you so much. We really appreciate it. Sean Ayer is principal managing partner at Trinity Investments, talking a lot about the state of commercial real estate when it comes to luxury hotels. I don't remember the last time I feel like I've traveled. It's been so long.
Well, we were down in
Tennessee, right?
Nashville.
Yeah, we were.
Hell, you were at the Gaylord Opryland Resort.
I mean, I clocked like 14,000 steps one day, just like being a person and walking around that hotel.
Exactly.
All right, much more coming up. We're going to go back to earnings here. Honeywell coming out with earnings that seem to disappoint the street. That stock is down by about 5%. We're going to talk to the expert on industrials. I cannot emphasize that enough. Karen Ubelhart is Bloomberg Intelligence Senior Industrials Analyst. She's going to join us on where they wound up falling short here for earnings. All right, checking on the broader market, you're looking at the NASDAQ. It's now flat, so making up some of those losses from yesterday, really. S&P is up by 0.3%. The Dow Jones Industrial Average up 0.6%. That follow-through selling kind of stopped right now. Now we go to Michael Barr for world and national news. Michael.
Thank you very much, Alex, Paul, John. President Joe Biden framed his decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders.
America's going to have to choose between moving forward or backward, between hope and hate, between unity and division.
It was Biden's first speech since ending his re-election campaign and political career. We get more with Bloomberg's Bill Ferries.
President Biden seemed to be making kind of two key points. One was his argument that stepping aside allows the Democratic Party to unite behind Kamala Harris, gives them a strong ticket to go forward and challenge Trump and fight for democracy. And then he also made a clear pitch for really his legacy and his place in history.
Bloomberg's Bill Ferries. At his first campaign rally since President Biden's exit from the race, former President Trump turned his attention to the presumptive Democratic presidential nominee, Vice President Harris. Trump, speaking in Charlotte, North Carolina, slammed Harris and Biden.
This November, the American people are going to tell her, no thanks, Kamala. You've done a terrible job. You've been terrible at everything you've done. You're ultra-liberal, and we don't want you here. We don't want you anywhere. Kamala, you're fired. Get out of here. You're fired.
Harris will campaign today in Houston, speaking before the American Teachers Federation. Former President Trump leads Vice President Harris in Arizona, Georgia, Michigan, and Pennsylvania, according to Emerson College The Hill polling. In Wisconsin, Harris and Trump are tied at 47%. New York Governor Kathy Hochul sued over her pause on the city's traffic congestion pricing plan. An advocacy group, the City Club of New York, claims Hochul had no legal authority to put the program on hold. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And it's green on the screen after that $1 trillion wipeout for the NASDAQ yesterday. Seeing a big swing for big tech stocks this morning, in particular, NVIDIA. That's rebounded from a drop of as much as 7% as dip buyers jump in. NVIDIA shares right now, they are up about 0.2%. NASDAQ 100, Bloomberg Magnificent 70 Index is slightly higher at the moment. Max Kettner over at HSBC, he still thinks stocks can rally and that the rally can broaden out.
Earnings story. The beat rate is still close to 8%. Average surprise factors are still around 4.5%. So on aggregate, the earnings season so far has still been really, really solid. And that speaks for other sectors really to participate as well.
Well, the Russell 2000 of the smaller cap stock, best performing of the major indexes right now. The Russell is up close to 1.9%. Best performing stock in the S&P 500. Never heard of them. Molina Healthcare. They provide managed healthcare services under Medicare and Medicaid. They posted second quarter earnings per share and revenue topping estimates. S&P 500 right now 20 points higher. That's up 0.4%. 54.47 on the index. The Dow Jones Industrial Average up 288 points. That's a rise of 0.7%. NASDAQ 100 up 1 point. Well, I spoke too soon. Down 4 points right now. 2-year yield. That is right now down 2 basis points, 440. The 10-year is 5 basis points lower. That is at 422. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. And NVIDIA, as I'm talking, also just turned lower. So a volatile time.
All right, fair enough.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over there and check us out. All right, here's a company to be named later. Here are the business lines: aerospace technologies, performance materials and technologies, industrial automation, energy and sustainability solutions, building automation. Are you kidding me? When I see this, I think Karen Ubehart. This is what she does. Karen Ubehart, Senior Industrials Analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. And the company is Honeywell. Stock's off about 4.5%. They put out some numbers last night. Maybe the street doesn't like them. Karen, thanks so much for joining us here. What's going on with our friends at Honeywell?
The revenue wasn't really out of whack. That was kind of in line across the board, and of course, aerospace beat. But by a little bit, it was high double digits. It was 16%. Wow. But margins went down in 3 of the 4 businesses, and that doesn't happen at Honeywell. And some of it was cost, and some of it was product mix. Like in aerospace, they're ramping up the new plane building, right? That's lower margin. But the other two, I think that's the surprise. Down 60 basis points in one, down 90 basis points in another. Honeywell doesn't miss on margins. So,
so what? Go through more on the why, because I've not seen Karen actually exasperated with Honeywell.
No.
I'm kind of getting that.
I mean, it's more like, what's going to move this thing? What's going to move it? Well, it got moved, but it got moved in the wrong direction. I think that, product, like for example, some of the lower margin stuff in chemicals, that's the one nobody understands, performance materials, it's chemicals. And that business, the mix was bad in that business. And then in warehouse automation has been around their neck and been terribly underperforming for a very long time. And that hurt industrial automation. They moved a higher margin business in there called process automation to raise the margins in that business, but the growth, it was down 8%, and it's been down double digit. So and so things are just and their long-term growth rate has been way under their peers now for 4 years. Not way, but low double digit, not mid. I mean low single digit, not 4 or 5%. It's been more like 2 to 3.
Well, I mean, I'm looking at the stock here, year to date flat, trailing 12 months flat. I'm looking at on the FA function to see where the street's looking for revenue growth, 5%, 6%. So kind of a GDP kind of top line grower. That's why I think Karen's so concerned about the margins, because that's the only real lever here, right?
And one other thing, 800 million of that increase is acquisitions. So if you take it out, the core business is not growing.
Okay.
So if they have top line issues, and the cost control part has been like worn out, as in like there's no more levers to pull. therefore, thus, what do they do?
Well, it's funny because they're one of the companies that has not done a big portfolio move. And they were of the thought, as is Illinois Toolworks, if it ain't broke, don't fix it. Okay. And they're probably going to get more pressure. And it's probably the warehouse automation, that part of industrial automation that's going to be looked at. They think it's a good long-term secular story. They got one good year out of it, and it's been a problem for them for 3 or 4 years. I mean, they've got to do something big. He's going to prune up 5 to 10% of the portfolio low growers, but that's not going to move the needle.
So I spoke with the CEO of Vimal Kapoor, who has been Vimal Kapoor,
what company?
CEO of Honeywell.
Oh, okay.
And he's been in the job for a year. And I talked to Karen before this, and this was one of the big things. It was like, look, you need a catalyst. You don't have one. Many people think spinning off that unit or a transformative M&A deal would be that catalyst. It didn't look like he acknowledged what the issues were, and he understood what they were, and he acknowledged that, but they seem very committed to the model that they have.
Yes.
Is that surprising to you?
No, I would agree with that. He's trying to make his mark. This is his plan. It's not that different from what Darius Adamczyk did, but he's doing more on the M&A side. And that was something that they were getting, people did not like. They sat on $10 to $12 billion and they wouldn't buy anything. They were too nervous or whatever. So he's been on an M&A spree, and you're not going to see the results of that for a while, right? It just really happened this year. And he sees, 3 secular growth markets that he's committed to, and I don't think he's ready to make a big change yet. But the stock stays down longer, that may change.
So I'm kind of wondering, because it's been a while since I've read your research, like, why own these things? But there are some performers out there. I mean, you look at 3M up 15% year to date, ITT up 18%, Emerson up 18%. So these stocks can move. How do investors typically think of industrial stocks?
Well, these they tend to they're certainly tied to the economy and some of and their short cycle stuff, right? But there are segments that are still very strong, like carrier and train and all the climate related stuff. That is doing very well. Emerson has rebuilt the company, transformed it, and it's going pretty well. It's a complete change. They got out of a third of their business, and they're executing extremely well. So I mean, there's company specific stories. I'd say HVAC is probably the strongest end market story, and aerospace. So those that have aerospace are also getting a kicker. But Honeywell's getting that kicker, but it's being diluted by the other businesses. So
hence the warehouse. What do you think turns around the warehouse business? Like, what's the really big problem there?
Well, the orders have started to turn,
okay,
but the margins in that business are pretty low, and project business is usually lower than aftermarket, and they don't have a very big aftermarket business in that. Like in aerospace, it's like 50% of sales, and they make huge margins, right? Well, this doesn't have a aftermarket really.
Now, for industrials, is there any AI play? Because even Alex has put an AI angle on energy successfully. So. How about
they're all using it in some form. They've,
okay.
Fortive probably talks about it the most. But again, it's not going to be something that moves the needle on these companies. And Honeywell owns this business Quantinuum, which is, it is AI driven, and it's a very small piece of their business, and they're going to sell it. They are going to sell it, and they'll get cash for that, and then it won't have any impact on them.
I mean, somehow the utility sector has become an AI play, but maybe not so much the industrials. All right, Karen, thank you so much for joining us. As always, Karen Ubelhardt, Senior Industrials Analyst, Bloomberg Intelligence, live here in our Bloomberg Interactive Broker Studio. Appreciate that. Looking at the markets, the NASDAQ absolutely unched. Nothing happened in there. The Dow up 320 points. Nice rebound off of yesterday, 0.8%. The S&P, 0.4%. I'm going to do the stuff that John Tucker never talks about.
Okay, do it. What?
Bitcoin.
Luxury retail?
Off 2%. No, I'm still pricing out some handbags. The mini handbags are just like $3,000 or $4,000. Anyway, Bitcoin, 64,600, off a couple of percent. WTI crude oil getting a little bit of a lift here today, sitting right around $78 per barrel. Gold off $35, 23.62 here. I mean, you had that nice rally off of gold. And I always think when Mike McGlone, Bloomberg Intelligence Commodities Analyst, buy gold, sell everything else.
Yeah, and And unless you need to sell it when you're deleveraging or because there's a liquidity event, which is kind of what we saw yesterday when everything was basically down except for that 2-year. All right, we're still waiting, though, for Ames International to come out with earnings. This is...
Company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. IT workers, they've been working long hours to restore all those computer services that were interrupted from the global outage last week. Well, they got rewarded a $10 gift card from CrowdStrike, a cybersecurity company whose flawed update triggered the chaos. In an email, the chief business officer said the company recognizes it caused additional work for cybersecurity and IT staff who helped CrowdStrike's clients recover. And for that, we send our heartfelt thanks and apologies to the clients for your inconvenience, they said in the email. The message includes a code for Uber Eats credit. It reads, to express our gratitude, your next cup of coffee or snack is on us. It was greeted by a lot of scorn on social media.
Cool, thanks. That's what I would say.
$10. Yeah, okay. Walt Disney's Marvel Studios, this for you, Alex, hopes this week's opening of Deadpool and Wolverine will have the best domestic opening weekend of any movie so far this year. The industry tracker Box Office Pro forecasting $180 to $200 million in ticket sales in the U.S. and Canada. Disney, of course, acquired the movie and TV rights to Deadpool and X-Men characters. That was part of the 29 deal. What was that? It was a $71 billion acquisition of 21st Century Fox. Amex refreshing its U.S. consumer gold card for the first time since 2018. So they're offering more of its the trademark dining and travel credits in a limited edition white gold design, as well as the trademark gold and rose gold designs. New car benefits include a $100 annual statement credit at Resy restaurants in the U.S. and $84 in credits for Dunkin' Donuts purchases. And that is a look at your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, happy Friday Eve. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. And for now, we bring you world and national news with Michael Barr. Michael?
Thank you very much, Alex. Paul. John, former House Speaker Nancy Pelosi is praising President Biden's address to the nation. Speaking last night from the Oval Office, the president says now is the time to pass the torch to a new generation of political leaders. At an event for Democratic women today in Washington, Pelosi called on Democrats to vote for Vice President Kamala Harris in November.
Make no mistake, this is a politically astute Vice President of the United States.
The Republican-led House of Representatives took up a resolution to strongly condemn the Biden administration and its so-called border czar, Kamala Harris, for failure to secure the U.S. border. Bloomberg's Irv Chapman reports from Washington.
Republican Darrell Issa focused on the vice president.
In an election year, they want to unclaim their border czar, and they want to unclaim responsibility. She was assigned it. She didn't come to the border.
Democratic leader Hakeem Jeffries.
It's a fake and fraudulent resolution that lies about the vice president. She was never assigned the position of border czar. They're making that up.
Democrats indicated Harris was assigned to visit Central American countries and discuss how to stem emigration. She did visit them. In Washington, Irv Chapman, Bloomberg Radio.
Israeli Prime Minister Benjamin Netanyahu is set to make a long-awaited White House visit today to meet with President Biden and likely Democratic nominee Vice President Harris. Tomorrow, Netanyahu meets with former President Trump in Florida. A former Uvalde, Texas school police officer who was part of the slow law enforcement response to the 2022 mass shooting at Robb Elementary School has pleaded not guilty during a court appearance. Adrian Gonzalez was one of the nearly 400 law enforcement personnel who responded to the scene, but then waited more than 70 minutes to confront the shooter inside the school. Gonzalez faces 29 felony counts. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. More with Alex, Paul, and John.
All right, thank you so much, Michael Barr. So let's stay with the luxury theme as we wait for Hermès earnings here. So I don't know how many of you know, but if you go to a Taylor Swift concert, part of what you do there is you trade friendship bracelets. You bring stuff, you make it yourself, or you can buy some, and then you trade them with other fans.
Really?
My daughter has like 30 of them brought back from a concert that someone we know went to in Paris. It's like a whole thing.
I didn't know that.
So, shocker. But some designers are now getting in on that. So Christian Dior, for example, this is from the Journal, by the way, and Cartier now make their own versions of these friendship bracelets. Remember, this is like back in the 70s. These were like super cool. And these designs can go for like $6,000.
Wow.
Yeah. We have Carolina Bucci braids, strands of 18-karat gold thread to make her designs. We're looking at multiple thousands of dollars for these upscale friendship bracelets.
So when your daughter maybe gives her handmade one, she could in theory get back a $6,000?
Well, I don't know. I mean, do we think that some other 10-year-olds are sporting? I mean, maybe. Probably not in Brooklyn, but I mean, it's possible.
What if you don't have any friends? Can I get one?
You can go there and just like
will you be my friend?
I don't know. And will you be my
No.
friend? And they'll give you bracelets. And you stack them.
I didn't
So
know
I
that.
have to wonder if you stack the luxury ones or you just stack like the cheap ones. But apparently at Prada, you get a $420 beaded cord bracelet. It comes in muted ivory as well as black. Maybe you can stack ones that
And
are
these
only
are
$400.
specific for the Taylor Swift fans.
I mean, I don't know if they're specific
Okay,
for her,
just
but
friendship.
their friendship bracelets, you can get them as much as like $1,200. Some are $5,000, but this is like she's brought him back.
Brought him back, okay.
So you could make that
Another
that kind of
impact
argument.
on society.
Can you imagine like
Swift.
stacking like $5,000 friendship bracelets on your wrist? I mean,
I don't know.
someone's got to do it.
Someone's got to do it.
Yeah.
Luxury, luxury stock's trading off, but I mean, I don't know. I'd be interested to see when the Chinese consumers start traveling, like coming to New York, coming to London.
Yeah,
coming to
that's
Paris,
not happening.
because we don't see them.
Parisians, I hear a lot of people speaking French.
Yes, and a lot of German, just the Europeans are here, and they're all over the place. always. All right, coming up, Balance of Power with host Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Joe Biden finally speaks, and a new general election campaign begins. Welcome to the fastest show in politics this day. After the Oval Office address, we'll be joined in studio by Democratic strategist Kristen Hahn from Rock Solutions on the strategy and the path for Vice President Kamala Harris. Markets like a stronger than expected reading on the economy. We'll dig into the GDP data today with Jared Bernstein, chair of the White House Council of Economic Advisors, a bit later this hour, and we'll have analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis along for the ride today, and we start, as always, with a look at Wall Street, how these GDP numbers are playing right now with Charlie Pellet in New York. Charlie, how's it look?
Very much, Joe Matthew, indeed playing out very well. We have got the Dow, the S&P, NASDAQ all advancing. Dramatically different tone to the market from this time yesterday. The S&P very close to session highs right now, up 29, 54, 56 where we stand right now. That is a gain of 0.5%. We got the Dow up 348, higher by 0.9%, while the NASDAQ Composite Index up 49. For NASDAQ, a gain right now of just about 0.3%. The NASDAQ 100 Index hit very hard yesterday, up 0.2%. The Russell 2000, by far the outperformer today. Small caps rallying, with that index up now by 2.1%. 10-year yield 4.23%, with a 2-year 4.40%. Spot gold is trading lower by $34 the ounce, down 1.5%. $23.62 for an ounce of the precious metal, while West Texas Intermediate crude at $78.14 a barrel, up now by about 0.7%. Investors are now looking for the Federal Reserve to move in September. Following this morning's economic data, Gabriela Santos is global market strategist at J.P. Morgan Investment Management.
There's very clearly a downshift in economic momentum, and that's why it is important to normalize interest rates sooner rather than later. Now, sooner I don't think is next week, but September is still very much on the table, even after this morning's data.
Gabriela Santos of J.P. Morgan Investment Management. The automaker Stellantis has started floating the possibility of selling one or more of the auto giant's 14 brands should they fail to remain profitable. Stellantis shares, they are dropping today by 7%. Tough day for automakers. Ford having its worst drop in 4 years after a big earnings miss. Ford shares tumbling now by 16.6%. Rival GM also lower, down now by 4.4%. So again, recapping, stocks are advancing. S&P up 33 right now, 54.60. That is a gain right now of 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, good to see you. Thank you, sir. Charlie Pellet in New York, the voice of the New York subway, not to mention the financial markets. He'll be back later this hour, as we always keep tabs on things, especially on a day like this when you have data from Washington driving trading in New York, which is where we start the program today. This is a pretty remarkable number here. Growth accelerating more than forecast. Second quarter GDP, 2.8%, April-June period, after rising 1.4% in the previous quarter. I thought the economy was slowing down. PCE in here, underlying inflation 2.9, not the best number with regard to forecast, but we're clearly accentuating the positive here. And you know there are massive political ramifications to all of this. We'll be talking later this hour with Jared Bernstein from the White House, the president's closest economic advisor, just a day after Joe Biden addressed the nation from the Oval Office. Now, we've got a lot to cover this hour. We will get into the politics here. Pretty heavy stuff. A day after the President of the United States tells the American people, at least this time in his own voice, that he's not running for re-election. We've got a brand new general election campaign, and we've got an economy that can't be stopped. And that's where we start right now with Stuart Paul, Bloomberg economics, easy for me to say, U.S. economist. Stuart, it's great to see you. I've been asking people for months and months, probably like you have, the same question. And I feel like this begs us re-asking, is the soft landing here?
You know, odds are obviously increasing for a soft landing. We have seen some disinflation in the background. Of course, inflation numbers surprise to the upside. The one thing that I want to make sure our listeners around the world understand, though, is that today's numbers, especially the GDP numbers, aren't all that they seem. They're not as good as they seem. As you mentioned, it's the data from Washington that's driving the numbers, but it's not just the data that, from Washington driving markets right now. It's also some of the spending. I think what mostly drove the upside surprise in the GDP numbers today is the increase in government spending, particularly defense spending and state and local spending. Beyond that, about a third of GDP growth in the second quarter comes from accumulation of inventories, which we don't really think is intentional on the part of optimistic firms. We think that it was an accidental build in autos due in part to a cyber attack that we saw in June that slowed the pace of auto sales.
Huh. So this is an inventory story? The headline doesn't match the story, I guess is what you're saying, Stuart. Without those factors, what would this report look like?
It certainly wouldn't be as bright. So about 1/3 of GDP growth came from inventories. About a quarter of GDP growth came from increased spending, but on housing and healthcare, right? So the sort of things that folks really can't go without. About a fifth of GDP came from spending on transportation equipment. And we are still climbing out of the semiconductor shortage and the shortage of autos that we had post-COVID. The fleet is pretty old, so we're going to see some persistent spending on transportation equipment. But what the Fed is really going to be looking at are things like capital expenditures and business fixed investment and households' discretionary spending. And discretionary spending only accounted for about 1/10 of GDP growth. And if we were to strip out investment in things like software, things that are associated with intellectual property, for example, business fixed investment was nil. So I think that the report was sufficiently soft underneath the surface to warrant a cut probably in September, not as soon as folks were talking about yesterday when equities were really taking a bath and folks were getting a little bit nervous that maybe the Fed would go next week. But the number is sufficiently soft under the surface that the Fed could move in September.
Well, this has been a cold shower with Stuart Paul. Everybody's excited. My God, look at the markets here, Stuart. The S&P's up 30 points, 0.5%. The Dow's up 1%, almost 400 points. Are you suggesting then that investors are basically just celebrating overspending in Washington? And I'm asking you that on a day. Look at RTX up 9% here. Raytheon blowing the doors off because, yes, higher defense spending.
As we just heard from Charlie, though, you know, rates are off, right? So folks are still getting a little bit of an increase in multiples, perhaps going on in the background. We're getting a little bit of a breather after a major sell-off earlier in the week. Yeah, and so we also, one thing to think about is that we also saw a little bit of, we still see an upward trajectory in things like continuing claims. And as the Fed sees some softness underneath the surface of the GDP numbers, it can start focusing on just mounting pressures on the unemployment rate, and the labor market starts to take a little bit more attention, becomes a little bit more front of mind. And so, we can see those rate cuts in September that might warrant a little bit of this equity move. But again, I mean, it's mostly just
Goldilocks.
It's mostly just
I got you. And there's about 100 different factors. Yeah. I totally get that driving the markets here. When I hear Goldilocks, though, in the Bloomberg newsroom, I start paying attention. And then we call Stuart for the real take. Stuart Paul, Bloomberg Economics U.S. economist. Great to see you from world headquarters in New York. Stuart, thank you. Of course, this data arrive a day after the big speech. There were no surprises, of course. Joe Biden already let us know on letterhead on Sunday that he would not be continuing his campaign to run for re-election. But he did address the American people from the Oval Office last evening. Here's a taste.
I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation. You know, there is a time and a place for long years of experience in public life. But there's also a time and a place for new voices, fresh voices, yes, younger voices.
And one in particular, named Kamala Harris, we're now following as the nominee in waiting. Joe Biden there in the Oval Office, he spoke for just shy of 10 minutes, had family in the room with him, some very touching photographs of him with the First Lady and some of his kids. Hunter Biden was in the Oval Office. I guess he got a round of applause from those who were there, saying what we already knew. Sometimes it's different when you actually see it and hear it. Surprising, maybe not surprising. No mention of his age and the actual reason why he's leaving this race. So let's get into it with an authority. Kristen Hahn, I'm glad to say, is with us, partner at Rock Solutions and one of the most connected Democratic operatives in Washington at the table. Kristen, it's great to see you. Thank you for coming in here. Were you sad after watching this, or is this a great moment for America?
I mean, I think there was such a juxtaposition between what President Biden has said and what we've seen. You know, I think a lot of people, Trump was quiet for a little while.
Mm-hmm.
He was, I don't know who got him to be quiet for a little while, but he was, you know, was more subdued. And I think we just saw in the last couple of days him saying that America is stupid and, you know, it's a stupid country. And I think watching President Biden is exactly what it means to be presidential. I mean, he's putting, like he said, it, you know, the future of our democracy, the future of this country is bigger than my own ambition. And that's the exact opposite in what we're seeing in the Republican candidate. So I think it was very heartfelt. I think people looked at it. They appreciated the leadership and the guidance this president has given us over the last 3.5 years. And then also a lot of excitement about the vice president and her candidacy. And, you know, you've seen it reflected in not only fundraising numbers, but also volunteers, people coming out. I'm feeling it here in Washington among the people that I'm working with as well.
Yeah.
So I think it was a kind of a solemn moment, but it was a hopeful message that he delivered.
Well, I heard from a number of people over the weekend, as I'm sure you did too, and surrounding the speech last night, even following it this morning. Some people are still angry, feel like they were misled, and that this White House wasn't honest with them about Joe Biden's condition. And I wonder if you're hearing that from inside Democratic circles as well.
I'm not hearing a lot of anger. I think that there are a number of people who thought this decision should have been made sooner. And, you know, but we are where we are. We've got plenty of time going forward. We've got a strong candidate in the vice president, and she's come out of the gate strong. But no, not necessarily anger, but, you know, there was a lot of confusion, not knowing what's going on, who's, you know, in the ear of the president, you know, what's happening. You saw Senator Tim Kaine talking in public on air, talking about him getting, you know, polling numbers back in Virginia.
Yeah.
And Virginia is now at risk, you know, and there was a real concern, I mean, particularly amongst, you know, my friends who are in the House, that like the backstop, I mean, if you look at the map, it's going to be difficult to maintain control over the Senate. The backstop is the House. And we were looking at potentially, you know, not losing the House because we don't have control of the House right now. But, you know, it was almost assured that we were going to take back the House, and that wasn't the case. And that really started to scare a lot of people.
That's what woke up the sleeping giant here, I guess. So bring us behind the scenes and how quickly all of this happened. I remember talking to Joe Biden in New Hampshire when he was first running here against Donald Trump in 2020. And he was leaving New Hampshire to basically, you know, go in the fetal position and end the campaign. And then something happened, as you remember. Jim Clyburn steps in. Everyone drops out overnight. All of a sudden, you're the nominee, and welcome to South Carolina. It kind of felt like that here, where there was all kinds of chatter about, do we have a mini primary? Look at these great governors. Somebody call Michigan. Somebody call California. Oh, I know, we've got Kamala. And then suddenly that talk stopped. A flow of endorsements. All the governors we mentioned endorsed her. And it does make people wonder who's pulling the strings here. How do things happen that quickly when a party apparatus can turn on a dime?
I think that you talked about it being chatter. I think there's a lot of gossip, a lot of rumor going around. I think, you know, the fact that we have so many potential, you know, candidates for president, it's an embarrassment of riches, and I think that's great. I don't think there was, and nobody I talked to, there was ever a chance that you've got a strong vice president and Vice President Harris that we were going to, the Democratic Party was going to pass over her, who's currently the vice president, a strong woman of color, for anybody else. So it's not surprising to me actually at all, and I don't think to most people I'm talking to that happened so quickly.
When does Barack Obama come around? The NBC is reporting the endorsement soon. I mean, got the delegates locked up. What are we waiting for here? If not a dramatic introduction or announcement at the convention, how's that going to play out?
I think it's. I don't think there was any after President Biden, very quickly endorsed her.
Yeah.
I don't think that there was any question that the other party leaders were going to do it.
You just want to stagger these to get the news out of each one of them?
I don't know. If I'm in that position and I'm guessing, yes. I mean,
give it a week.
You don't want to do it all at the same time. Give it a week. That's going to be a huge endorsement by the former President Obama. So, I think, the more you can stagger these out, the more you drive the news, and you're driving positive headlines.
Yes, right.
And the whole objective is to bring these voters back in, and younger voters, and we're not quite where we were among younger voters as we were when President Obama was running.
It's just a funny game. It's not like he's going to endorse Trump, but listen, I realize that's how it's played.
Yeah.
Bring me back into the Oval Office last night. Should Joe Biden have talked about the why, or is that just implicit? Should he not have said, I'm not getting out of bed the way I used to? Yeah, you're right. You saw me in that debate. That's why I'm doing this.
I think no, and I think a lot of it was implicit when he said, and yes, somebody younger, handing over to, the next generation, yes. And he acknowledged, yes, somebody younger. Implicit in that is we need somebody younger. So I think there was a lot of, and there's not a whole lot of nuance there. It's pretty on the nose.
Yeah, right.
But
he also needs to make people think he can finish the job.
That's true, and he did say, I'm here, finishing the job. I think that if he had said, I can't do all these things, then you're exactly right. Then why are you staying in office? I think he's completely able to finish the job. He said, that's what I'm going to focus my energy on that, rather than having to campaign and do that at the same time.
Sure.
So I think he struck the right tone.
Will this be the lamest of lame duck sessions in our remaining moment, knowing that
oh my gosh,
he's done?
I mean, I think also when you have to look at lame duck, everybody thinks about the lame duck president.
Yeah.
But you also look at the makeup of the Congress.
100%.
So a lame duck president, say he was a lame duck president with Democratic control of the House and Democratic control of the Senate, then you're we got to do 8,000 things before.
Not this time, though, huh?
Not this time. So I think, you're probably looking at a very lame duck.
So you're going to come back here in a month after Chicago. You know what we're going to be talking about is the government shutdown. Countdown to the shutdown with Kristen Hahn.
Yep.
Make your reservation now. You're going to be in Chicago, right?
Yes.
We're going to spend some time around this DNC, which is going to be a whole different process than we expected. Does she get the virtual nod, or does that happen in Chicago?
I think she'll probably get the virtual nod, but
it's next week or something.
Yeah.
All right.
But,
we'll talk more
Chicago
about this.
will be great.
Rock Solutions partner, I told you she was coming in. Kristen Hahn on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
on Wall Street. We do check markets all day long. Here at Bloomberg, we've got stocks rebounding after a sell-off that jolted markets around the globe. Traders now betting that the Federal Reserve will be able to engineer a soft landing. They are spurring a rally in riskier corners of the market, right to the equity markets, with the S&P best level of the day, a leg higher since our last update, up 46 now, a gain of 0.9%. Dow Jones Industrial Average up 479, up 1.2%. NASDAQ now up 130 points, a gain of just about 0.8%. Russell 2000 index of small cap shares now advancing by 2.2%. 10-year 4.24% with a 2-year that's yielding 4.42%. Spot gold down 1.5%, 23.61 the ounce, while West Texas Intermediate crude up 0.8%, 78.22 for a barrel of WTI. American Airlines Group has slashed its earnings outlook for this quarter and the full year, making it the latest carrier to temper expectations as industry-wide fare discounting and high costs squeeze earnings. American shares, they're up today by 6.6%. Southwest Airlines, big news there. Southwest will begin offering assigned seats, ditching the free-for-all policy that has been a defining feature of the carrier for more than half a century. Southwest shares, they're flying higher today, along with the other airlines, up by 6.6%. Recapping the Dow, the S&P, NASDAQ, Russell 2000, all rallying. S&P right now rebounding by 1%. Balance of power continues. Back we go to Washington. Once again, here he is, Joe Matthew.
Charlie Pellet, thank you. We'll get back to Charlie in a couple. Keep tabs on the markets here on this GDP day. And speaking of which, a conversation ahead with Jared Bernstein, the chair of the White House Council of Economic Advisors, will be with us here on Bloomberg Radio, on the satellite and on YouTube. You can find us on YouTube as we speak. Go now. Search Bloomberg Global News. You'll find us here in studio. Our live stream rolls through the day with all of our great programs here on Bloomberg Radio, and I'm glad that you could be with us. It's great to be back with you today, live from Washington, this day after the speech. Joe Biden from the Oval Office, a venue that he has not used a lot, to tell the nation essentially what he wrote in the letter on Sunday. And of course, we hadn't actually heard from Joe Biden for days. He came down with COVID. It was the last day we were in Milwaukee when we got the doctor's letter and the big headline on COVID. So here we fast forward a week, and Joe Biden holds forth from the Oval Office. 10 minutes long. The reaction from his former opponent, Donald Trump, on Truth Social. Quote, "Crooked Joe Biden's Oval Office speech was barely understandable and so bad!" Exclamation point. 3 O's in so. I guess that's really bad. He was hoarse, but you could understand what he was saying for the most part. Here's a taste of Joe Biden from last night.
In recent weeks, it's become clear to me that I need to unite my party in this critical endeavor. I believe my record as president, my leadership in the world, my vision for America's future, all merited a second term. But nothing can come in the way of saving our democracy.
Let's bring in Wendy Benjaminson, Bloomberg Washington senior editor, who had her eyes and ears on this address as well. Wendy, it's great to have you, as always. You're an editor. When you have 3 O's in the word so, so bad, how bad is it? Was Joe Biden that bad last night? What happened?
Well, I'm not sure he was 3 O's bad, but, you know, I'm
3
not
O's
texting
bad.
like a 13-year-old girl does. The, you know, look, it wasn't, he was unbound by the need to prove to everyone how young and vital and capable he is. So what we saw was sort of uncle or grandfather telling us, you know, come on, everybody, hold the country together. I'm not going to be there to help you, but please, you know, go ahead. I found it sort of a very comforting and avuncular sort of address, like I said, without the need to prove anything.
Yeah, should he have addressed the age issue, or is that understood? Should he have told the American people why he made this decision?
I don't know. I mean, it almost seemed unnecessary. For one thing, we all saw him again. He did sort of have a little trouble enunciating. He was clearly wearing makeup to, help him look better after suffering from COVID for a week. And I think he didn't want to acknowledge the arguments of the people who literally pushed him off the campaign. I think what he wanted to say was, my goal has always been to, preserve democracy, which he considers Donald Trump a threat to. And therefore, I am leaving so that I can better help, preserve democracy by not being the Democratic nominee. So I thought there was a lot of understood, subtleties in there, but the message was clear. We all knew what he was saying.
Well, that's right. Did he put to bed this idea that he cannot finish the job? Because we're still hearing these calls, Wendy, and these may be driven by politics, but nonetheless, the Speaker of the House, Mike Johnson, if Joe Biden is not fit to run for president, he is not fit to serve as president, must resign the office immediately. November 5 cannot arrive soon enough. How does he tamp down these calls, or did last night do the job?
I'm not sure last night did the job for that, but I think he just needs to be a very active president, a very active lame duck, in the hopes that Democratic president itself is not a lame duck. So I think he's talking about all the things he wants to get done. He did last night in those, in the last few months that he has. He's going to spend the next 6 months doing this and that and trying to finish the legislative accomplishments and things like that. So, he was, I don't know if he'll be able to tamp down those calls because, Joe, as you correctly say, that's driven by politics. There are Republican senators who are older than Joe Biden who are still doing the job. So I think, there will still be people until January 20th, 2025, when the next president is sworn in, who will say Joe Biden is too old to be president.
It's interesting to see what he's up to today. And by the way, I was one of the folks who thought he wouldn't possibly drop out before today because he's meeting with Benjamin Netanyahu. He's got a real job here to do as president with this bilateral meeting following the address to the joint session yesterday. What's Joe Biden's posture? Some are suggesting that now he's free to say anything. He can be a tough guy with Netanyahu so Kamala Harris doesn't have to. Which Joe Biden are we going to see in the Oval Office today?
I think what Benjamin Netanyahu is going to see in the Oval Office today is a guy who wants to cement his legacy. And there have been many presidents, Democrat and Republican, who want to seal their legacy with a Middle East peace deal. And Biden suggested last night that that was a goal. So, if he's going to start small, he might just hope for a ceasefire deal that the U.S. is trying to negotiate with Israel and with Hamas and a bunch of other, third-party negotiators. Netanyahu is being a bit stubborn about that. But I think he might even want to try to go farther and try to get some sort of broader Middle East peace deal, maybe include Hezbollah or something like that to prevent this war from spreading to the north. Those are great hopes, and many presidents have tried. We'll see if he's able to today.
Yeah. Will he have a ceasefire in place for the next president, whether it's Trump or Harris?
I don't know. And Kamala Harris has a narrow path there to walk when she meets with Netanyahu later today, because she appears to be a little less, fully in on everything Netanyahu does the way Biden seems to be. And yet she is still the vice president. She is still a White House official carrying out U.S. policy as it is under Biden. So I don't know how tough she can actually be in public, countering Biden's views on Israel and the conduct of the war. But it could be that in private with Netanyahu, she's saying, look, buddy, come January, there's going to be a different conversation. I don't know.
We'll find out together, Wendy. It's great to have you. Wendy Benjaminson, Washington senior editor for us here at Bloomberg. Always an insightful conversation with Wendy as we make our way into a new campaign. This is quite remarkable to have gone through all this together since Milwaukee. I'm Joe Matthew in Washington. Thanks for being with us on Balance of Power here on Bloomberg Radio, satellite radio, and on YouTube, where you can find us right now. Search Bloomberg Global News with a very important conversation with the chairman on this GDP day. The headline, as I mentioned, U.S. economy grew faster than expected last quarter on firm demand. And so we turn to the chairman, Jared Bernstein, live from the White House, of course, chair of the White House Council of Economic Advisors. Mr. Chairman, welcome back to Bloomberg Radio. It's great to see you and appreciate the time here. This is a beautiful headline for you. The first word I heard in the newsroom when I walked in this morning was Goldilocks. But then I talked to Stuart Paul at Bloomberg Economics, and he says, but Joe, this is all about inventory rebuilding, that this is their one-time factors, prices went up a little bit. You need to slow the enthusiasm. And so I ask you, Jared, how we should be interpreting these data.
Well, it's a great question. First of all, always great to be with you, Joe. You don't want to over-torque or over-index on any one report. And so what we did here at the Council of Economic Advisors, and you can see the blog on our website, is we looked at where GDP has gone since President Biden took office in comparison to a couple of prominent forecasts. And it just kept, our GDP path just kept beating the forecast. You well remember predictions that we would be in a recession or a deep recession by now. Indeed. And yet the strong labor market, strong consumer spending, and in this report, some really nice business investment. So I take the point about inventory. It's the most volatile component of the report. But even if you shave those by half, you still beat expectations. So solid report.
Solid report, and it adds to the mosaic here, if I can use that term, that we're seeing as a potential soft landing. You know, it's my job. I've been asking you this for a year, I think, on the monthly. If this is it, and it sure feels like it, Jared, am I wrong?
Well, I think that the way to look at that question is from the perspective of where we are and what where we are says about where we're going. So where we are is we have a job market that has almost since this president has gotten here, since it was such a strong intention of his to get back to full employment as soon as possible, that has consistently, persistently been in the neighborhood of full employment. And as inflation has eased, that generates real wage gains. That supports strong consumer spending, about 68% of our GDP. So underlying this report, this is kind of my same point about you don't have to over-torque on one report, as significant as a beat as it is, to understand the fact that we have some very nice momentum, a kind of a perpetual motion forward kind of story with strong labor market, easing prices, real wage gains, real incomes rising, feeding into good consumer spending. That in turn helps to get investors back into the act. And I do think that is very much the characteristic of a steady, solid, ongoing recovery. Call it whatever you want, but that's the way I would take it.
Yeah, well, but it kind of sounds like it. Although I will ask you about government spending, Jared, quite a bit, contributing more here to GDP compared to the first 3 months of the year. Defense spending, a big part of it, helped to offset lower residential investment. Is that sustainable?
I think when you're talking about sustainability of government spending, you're really not talking about a month or a quarter or even a year. You're talking about the long term. I mean, the sustainability question in the near term is really a question of how liquid is the market for borrowing, for selling government bonds. And, the auction, you look at the auctions, look at the bid covers, and, you see that those are still very robust and that there's persistent and deep global demand for U.S. debt. That's all great. But the sustainability question asks, what about over the long term? If outlays continue to outrun receipts, revenues, eventually that arithmetic can be extremely constricting, especially if you believe we're in somewhat of a higher interest rate environment, so that debt service is pressured. And that's why our budget in the long term, over 10 years, has very significant deficit reduction based on both revenue increases at the very top of the scale and cutting spending. So I think the sustainability question is a longer term question. You have to address it. Our budget does that, but we need Congress to work with us on it.
Well, yeah, Jared, they just went home. I'm trying to figure out the next move here because they're going to come back in September. We're going to be talking about the potential for a government shutdown all over again. History repeats itself. How should we be preparing ourselves for this?
It's a really great point. I mean, Jared, they just went home kind of says a lot, right? Because you're like, I'm telling you a very clear arithmetic way forward here. This is not rocket science. It's pluses and minuses, with some interest rates and some compounding thrown in. And if people are not going to, if members of policymakers are not going to take this seriously, of course we're going to have a problem. Look, I am not going to get political here because that's not my job, but I do think that people who are concerned about this should look at the record and at the budgets of what people are proposing. Now, we know that the guy we're running against wants to pass an unfunded $5 trillion tax cut, and we know that the other side, the Republicans, have signed pledges never to raise revenues, and the only spending they've cut has been in some very narrow areas. So again, I think look to the budgets, and you get a sense of who's serious and who isn't.
I've been asking you for months and months, a couple of years, I guess, Jared, about what the economy would look like for Joe Biden in a second term. I can't ask you that anymore. But when you look at the trajectory of data here, I won't ask you what the Fed's going to be doing, but if you map this out 6 to 9 months, and Kamala Harris is the next president, what will she be inheriting?
Well, I think one answer to that is to look at a document that probably hasn't gotten a lot of attention, which is the mid-session review that we published last Friday, because that has our forecast in it. It's nothing revolutionary. It's pretty much a similar forecast if you looked at Blue Chip or CBO for that matter. A few differences here and there, but that's our answer to that question. And it says pretty much, what you're seeing now, steady, stable growth around inflation back to something that looks like the target. And it's that latter part that's so important. I'm giving a speech next week where I'm going to focus on the almost round trip of inflation. The fact that inflation, went up to peak at 9+% in June of 22. We're now looking at 3% year over year. We'll learn more about PCE inflation tomorrow. But if you listen to the language of the Fed, they're pretty much telling you that they view themselves as on their way back to the target, and that the kind of pause in disinflation that characterized Q1 seems to be largely behind us, and that the forces of disinflation are in play again. And I think that's key for the economy that President Harris would inherit, one where inflation was back down, and some of the factors that led to the high inflation, particularly snarled supply chains and misalignments of that type relative to the pandemic, are solidly behind us.
Pretty remarkable answer, Jared. So the timing sounds like it could be impeccable for a Kamala Harris presidency if she wins, on target, is what you're saying. I know your time is tight. I want to ask you about this. Go ahead.
I think that every forecast has a confidence interval around it, but that is, I think, that is the central forecast. Yeah.
I love that term, confidence interval. Joe Biden spoke to the nation last evening. Jared, you've known him for a really long time. Were you at the White House last night? How did you watch the speech?
Yeah, I was around, and extremely moving. And you're right. I've been close to the president for decades. The guy we saw last night is the guy I've known and loved for a long time. It's been an absolute, it continues to be an absolute honor to work with him. And I should tell you that the message from him to our team is we are not done, folks. We got 6 months of work to do under this president, where we're going to continue delivering for the American people. So my shirt sleeves remain rolled up.
That would imply then that you are confident he can finish the job. You see him and talk to him more than most Americans.
Oh, unquestionably. He is ready to get back to work. He's here. He's meeting today, as you just discussed, foreign leaders and on the economy. I know he liked that GDP report, so he and I will have more to say about that. And he is, as I said, our marching orders are very clear. We're going to keep building on the progress we've made thus far. We got a great GDP report. We have inflation coming down, 16 million jobs and counting, manufacturing, domestic. Oh, one of the message from him is implementation, implementing the Infrastructure Act, the CHIPS Act, the Inflation Reduction Act. That's real work. And Biden has always been an implementation guy. He is not a president who says, sign the bill and let's move on. He wants to make sure that what we said we're going to do for the American people is what we're going to do. So our work is still cut out for us.
You know, we talk about good news and bad news, Jared, but it always means a lot to us to get some time with you. We appreciate it very much. Jared Bernstein chairs the White House Council of Economic Advisors and one of Joe Biden's closest advisors, certainly when it comes to the economy. Thank you, as always, for the conversation here on Bloomberg. We'll have our panel up next. They're back, Rick and Jeannie, signature panel. Coming up next on Bloomberg after we check Wall Street on this GDP day. Let's get with Charlie Pellet right now, live from New York on the financial markets. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, stocks continue to push higher. Best level of the day. Jared Bernstein alluded to the GDP report, one of a number of factors helping send stocks higher today. Also yesterday, of course, we saw that major sell-off. Today, rebounding somewhat. 1% gain right now on the S&P 500 index. The S&P up 53, now at 5480. The Dow back above 40,000, 40,358, up 504 right now. Again, best level of the day, an advance right now of 1.3%. NASDAQ up 160, a gain of 0.9%. Small caps, so the outperformer by far. The Russell 2000 now surging by 2.5%. 10-year 4.24%. The 2-year 4.42%. Gold down $34 the ounce, down 1.4%. Bitcoin down 1.7%, 64,947. And West Texas Intermediate crude up 0.7%, 78.15 a barrel. Positive news this morning on U.S. economic growth and inflation. And with that story, here's Bloomberg's Vinny Del Giudice.
It's something to smile about, a sign of hope. Economic output top Wall Street estimates running at a 2.8% annual pace, and inflation continue to exhibit moderation. The second quarter GDP data suggests demand is by and large holding up, even with interest rates hovering at the highest levels in 2 decades. Second quarter consumer spending top forecast too, and business investment advanced at the fastest clip in almost a year. Vinny Del Giudice, Bloomberg Radio.
On a day when the rest of the market is moving higher, we've got cruise line stocks declining. Royal Caribbean, though, said it will reinstate dividends as record demand puts it on firmer financial footing. But Royal Caribbean down now by 4.6%. Among other cruise names, Carnival Corp down 3.6%. Norwegian Cruise Line Holdings of moving lower as well, down by 1.6%. So again, recapping a major rally on Wall Street with the Dow, the S&P, NASDAQ all advancing. S&P, to put it all in context, up by 1%. We've got the 10-year, 4.24%, the 2-year at 4.42%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Thank you, Charlie, and thanks for being with us on the fastest show in politics. This is Balance of Power on Bloomberg Radio, on the satellite radio, and on YouTube. Good to see you, and thanks for being with us just hours after the president addressed the nation. In about 15 minutes, he's due to be sitting down with Benjamin Netanyahu, the prime minister, in the Oval Office. We're going to bring you some of the sights and sounds of that meeting in our second hour. This is not a news conference. This is not a speech, but they do allow the press in, little press spray, as they call it, a pool spray from those members of the White House press pool to get some brief comments, quick view of the two, see the body language, get a sense of what's going on in the room, and we'll do that next hour here. They're going to be meeting with the families of some of the hostages taken on October 7th following this. So he's back to work after telling the nation last night that he's not going to be running for re-election. And, you know, there are a lot of calls around for him to just drop right now, drop the job, leave the office. If you can't run for re-election, says the Speaker of the House, Mike Johnson, then you can't be president. We're going to pick through some of this stuff and some new polling data as well, the speech and the reaction, with our signature panel, Jeannie Shanzano and Rick Davis with us right now on Bloomberg Politics contributors. Of course, it's great to have you both here. Now that we have heard from Joe Biden, I'd like to hear from each of you on the way he composed himself in that speech. Jeannie, it felt a bit anticlimactic since he told the whole world of his decision on Sunday. Was that 11 minutes worth our while, and should he have told the American people a little bit more about why?
Well, that's what I wanted to hear, and I think part of it is I was rewatching LBJ's really stunning announcement from 68 And of course, because of our environment, he had announced on Sunday, we knew what he was going to say. But I really did think, I guess it's the historian in me, wanted him to walk through how he came to that decision and to put to rest this idea that he should step aside from the presidency now. And I don't think he did either of those things. That said, I think he did what we pretty much expected, which is he had a litany of things that he achieved, and they are enormous. He talked about what he's going to do going forward. So from that perspective, it was what we expected. And he did make a small case for Kamala Harris, but I think because of the concern about making a political speech from the Oval Office, he strayed away from that, which I think makes sense.
How do you think he did here, Rick? Will this go down as an historic address, or was it more like an historic letter that we got on Sunday?
Yeah, I think we saw the battle of the bully pulpits yesterday. You know, Bibi Netanyahu speaking from the House floor, and I thought he did a much better job than Joe Biden did speaking from the Oval Office, which pains me because I think the Oval Office should always be the best of the best. Yeah, I think he should have explained why he got out of the race. Why else have a Oval Office announcement? We already know that he's not the candidate. In fact, the period of time between Sunday and this speech, Kamala Harris has already wrapped up the leadership of the Democratic Party and has become the presumptive nominee. I mean, in 3 days. He didn't tell us anything new. Yeah, okay, track record. Yeah, okay, you're going to stick around. Yeah, okay, you're a lame duck. Honestly, it left me really wanting to understand why would the fourth speech that this president has given in almost as many years from the Oval Office be void of any news or rationale as to why he has taken an incredibly historic step to step down 100 days before the election to make way for his vice president. I mean, it was very wanting in my view.
Really interesting. You know, you could have gone 15 minutes and maybe included a paragraph on his age, on his mental acuity. Jeannie, maybe have a revealing moment. He's said it before. I don't debate like I used to. I don't walk like I used to. Could he have used a little more of that?
I think he could have, and I was surprised because the goodwill towards him is certainly out there. Everybody knows this is a very difficult decision, and I didn't get the sense that he really was able or willing to play on that. Perhaps this is still so raw for him. It was personally difficult. You know, I say this flippantly, but not really. I don't know, like maybe wear a coconut tie or something. It just, you know, compared to, Rick was comparing it to Netanyahu, but compared to Harris out on the stump where she has been met with such energy and excitement, it really felt like a letdown. And I don't think it needed to be that because, of course, again, the goodwill is there, and it didn't feel like he met the moment in my mind. Just the second time this has happened, you know, in the, you know, last, 50, 60 years. It's a rare occasion. It's historic. And it seems like he wasn't able to express that or how he came to the decision.
Well, to Rick's point, Kamala Harris is not waiting. And I want to ask you about the massive disparity in ad spending this week. I don't know if it's even fair at this point for a campaign that's 3 days old, but she's up, her campaign is up with the first video. Think of this as the trailer for the big movie. Here's a snippet of the latest from the Kamala Harris for President campaign.
There are some people who think we should be a country of chaos, of fear, of hate. But us, we choose something different. We choose freedom.
They had cameras at the rally over the weekend with her so they can start making ads. Rick, we learned from the Associated Press, Trump and his allies are outspending Harris's team 25-1 when it comes to TV, radio, advertising. Jeannie, look at these numbers. Trump more than $68 million, Trump and Republicans, to just $2.5 million for Democrats. They obviously got her in a room to cut that voiceover. Do they need to get ads up on the air yesterday?
They do. This is very, very concerning. So far, accepting the advertising issue that we're talking about now, I think this has been as smooth a transition as you can ever imagine from a sitting president to his vice president to run. But the one exception there is exactly this issue about ad spending. I am not sure why, if she can wrap up the delegates needed to secure the nomination in 48, 72 hours, they didn't have ads prepared to go on this. And that is deeply troubling. She is facing a very tough fight. She's had a bit of a honeymoon right now. I suspect that that is ending or over, and she is going to face tough questions. She has real and compelling answers, but she's got to define herself before Trump does. And without the advertising, it's hard to do, and that is a misstep. The fact that we hear they're just going out to contract with advertisers now is incredibly troubling.
Yeah, look, I know this is something that Rick used to do for a living. I don't know if 3 days is enough. They're saying, look, you guys need to give us a chance here. In the meantime, she's dominating earned media, Jeannie. That is something we need to acknowledge, right? There's actual buzz that you can't pay for around the Kamala Harris campaign.
There absolutely is. Hence my reflection on coconuts, Joe. There's so much. I mean, it is a brat summer. It is a brat summer. And I say that not knowing what it quite means. But so this is, she has earned this. You know, they have to be careful she doesn't step on it. It is something you cannot pay for. We know how Donald Trump has dealt with women he has gone up against. He has called them crazy. He's trying to do the same thing with Kamala Harris. The beauty of the social media she is earning is that they are saying, yeah, she's quirky and we love it. So that is something you can't pay for, you know, but again, it doesn't put off the idea that they need to get their ads out and up and they need to build on this and they can't be outspent by the Republicans in the way they have been.
Well, let's hear from Rick on this now that I know I need to learn about Brat Summer and Project Coconut. There's so much I don't know about. Rick, talk to me about the ad wars here. Is it even fair to be questioning whether Kamala Harris should have had ads up 3 days ago? The Associated Press writing that Trump and allies are outspending the Harris team 25-1. If you were orchestrating this, when would you be up on TV?
Yeah, I think you can't let them paint the picture. Now, Harris was up, or Harris, the Biden campaign had been running ads against Donald Trump in a lot of these states, you know, really unchallenged for a long time. It wasn't until a month ago that Donald Trump raised enough money to be able to use an ad campaign. So not critical today. July and August are not the months you're going to win a campaign. And Donald Trump is trying to make something out of a lackluster convention. It looks like he's gotten no bump, maybe even a negative bump off of his convention. The J.D. Vance announcement has become a dud. And so they need to have that kind of firepower right now. With the energy that Jeannie described that's going on around Kamala Harris today, I think they can take a breather and not worry about it. In fact, I think there's an argument to be made right now that running any ads paid between now and the convention is not as efficient as having that capital to spend September and October.
Fascinating take. Wow, and Rick Davis, JD's already a dud. Things happen quick around here, and that's partly why we'll have our signature panel back in hour 2 of Balance of Power. They'll be back in less than a half an hour here with a lot more to talk about at this very important political moment. 5 minutes away from Benjamin Netanyahu sitting down with Joe Biden in the Oval. We'll have more on that as well as we add Kayleigh Lyons to the conversation on the fastest show in politics. Stay with us for hour 2 ahead, only on Bloomberg.
of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Joe Biden gets back to work after announcing his plans to drop out of the presidential race. Welcome to the fastest show in politics. As the president sits down this hour with Benjamin Netanyahu inside that same Oval Office. I'm Joe Matthew alongside Kaylee Lines here in Washington. Welcome, Kaylee. This is a key moment for a president who has made a ceasefire in Gaza a priority for his administration while it still lasts.
Yeah, of course, it's only going to last for a few more months, as he confirmed to the nation in that Oval Office address last night. That was in part a speech about democracy, frankly, and how he does view it as on the line in this election, and that his actions were in the name of trying to protect democracy. But it was also about the legacy that he thinks he already has and the one that he wants to leave. And peace in the Middle East, a ceasefire in Gaza came up, and I wonder to what extent that will be expressed behind closed doors to the Prime Minister of Israel this afternoon.
Yeah, I should think so. And we're going to be watching Joe Biden's body language, listening to his tone a little bit differently now that this speech has been delivered. And of course, the letter sent on Sunday, knowing that he has the freedom to speak without running for re-election, could bring some interesting moments.
Certainly. And of course, it's worth pointing out that after Biden and Netanyahu meet, the Vice President, Kamala Harris, will be meeting separately with Netanyahu as well after not presiding over his address to a joint session of Congress yesterday. She caught a lot of flack for it, although J.D. Vance, I would point out, was not in the chamber either.
Also
he was on
noting,
the campaign trail.
That's absolutely right. We're going to talk to Carmel Arbit from the Atlantic Council a little bit later on, as well. Josh Wingrove, Bloomberg's White House correspondent, who was on pool duty for that speech last night.
Yeah, it'll be interesting to hear what it was really like at the White House on such a momentous occasion for the president. So that's still ahead. First, though, as always, let's get a check on the markets with Charlie Pellet up in New York. Hey, Charlie.
Thank you very much. Lots going on in terms of financial markets today, and a very different tone to the market compared to this time yesterday. Right to the numbers, and you'll see what I mean. We got the S&P up 52 right now, 54.79, an advance right now of 1%. The Dow up 491, up 1.2%. NASDAQ up 157, up 0.9%. The outperformer by far, Russell 2000 up 2.5%. Again, to give that number context, the S&P by comparison up by 1%. 10-year 4.23%. The 2-year 4.41%. Spot gold down $33 the ounce, down 1.4%. And West Texas Intermediate crude up 0.8%, 78.18 a barrel on WTI. The automaker Stellantis has started floating the possibility of selling one or more of the auto giant's 14 brands should they fail to remain profitable, as pressure rises on CEO Carlos Tavares after a slump in first-half earnings. Stellantis shares down today by 6.8%. Meanwhile, Ford, after earnings, plunging by 16%. So again, recapping here, stocks higher, the Dow, the S&P, NASDAQ solidly in the green for now. S&P up 55, up by 1%. Balance of power continues. Another busy day in Washington. Back we go. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, thank you so much. I am Kaylee Lines, back alongside Joe Matthew here in Washington, where it's been a busy week, to say the least. A week that started Sunday with the announcement that Joe Biden was no longer seeking re-election to a second term, something that he formally announced to the nation in an address from the Oval Office in prime time last night. But if you were looking for an explanation as to why exactly he did this, what convinced him to leave the race, you may not have gotten that answer, but we did get this.
I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation. You know, there is a time and a place for long years of experience in public life. But there's also a time and a place for new voices, fresh voices, yes, younger voices.
Of course, one of those voices belonging to Kamala Harris. And we'll be talking a lot more about her campaign. They're out with their first video today with questions about why they're not up on the air, even though it's been only 3 days. But we want to stick with this for one moment. While it may have been anticlimactic several days after Joe Biden sent the letter stating his intentions, last evening was important, and we're joined to talk about it by Josh Wingrove, Bloomberg White House correspondent. Josh, it's great to have you. He's spent only 11 minutes talking to the American people. Give us a sense of what went into this speech There were a lot of questions, to Kaylee's point, I think, about why he didn't speak to the actual reason why he was leaving this race. Did they think they did a good job? Did they get their job done through the eyes of the administration?
Biden likes talking to historians, and one of them helped him write his speech last night. I think that helps frame where they were at. Okay. This felt like a capstone for him. A couple hundred staff poured in to the residents to watch it. Some of them teary-eyed, and they gave a big rah-rah thing in the Rose Garden afterwards. It felt like a goodbye. It felt like a retirement party at the White House. So that was the lens on it. I think he did nod to uniting his party, which is what happened here, right? It was the growing revolt, and in particular the questions about whether Joe Biden would drag down House and Senate Democrats and not just himself, that really seems to have been decisive. Remember, he said there were only three things that would let him step aside. One, the Lord Almighty, and so far as we know, that was not the case, but I suppose I stand to be corrected. Number two, a major health incident, ditto. We have no indication of that. And number three, if his aides told him he could not win. So it looks like it was door number three, and that's what led to the decision Sunday, the very, surprising one. The rapid coalescence around Vice President Harris since then, and this speech yesterday. Biden was defiant. You can tell he's still a little ticked. He had a line about thinking that his record deserves kick at the can to run in a second term. Yeah. And, Jill Biden's statement, his wife's statement was...
To those who never wavered.
A bit of an eyebrow raiser. Yes, exactly. She's from Philadelphia, I will note. So that, I think, he's going, but it's a bit kicking.
We're seeing some images, by the way, so our viewers know. This is from following the speech. He actually had family members in the Oval Office.
Yes, many of whom boarded the plane with the First Lady right after to go to the Paris Olympics. And, Biden's a family guy, not too surprising that they would be there, but that's, he's insisting on on serving out the end of his term.
Yeah.
The press secretary spent all the briefing yesterday really insisting that would be the case. But as I say, yesterday really felt like the last, speech that a lot of people are going to tune in on for what Joe Biden has to say. Now, there is work to be done. He alluded to yesterday Supreme Court reform, ethics reform that he wants to do. Not clear to me whether he means calling for it or attempting to do it by executive order, which would be a fight at the very least, but perhaps a fight he's willing to have. And of course, talks on Gaza, which relates to today's meeting with Benjamin Netanyahu.
Yeah, it's scheduled to begin any minute now at the White House, Josh. And he did talk about how he wants to see an end to the war in Gaza, peace and security in the Middle East he wants to achieve. Obviously, a lofty goal. Many others have tried to achieve that as well. So knowing that Biden is looking out for his legacy here, that he knows he's going to be a one-termer, does that mean Netanyahu might be a little bit more in for it than he otherwise would have been? Today, what kind of Biden is Netanyahu about to meet with?
Netanyahu seems to believe the opposite. He seems to believe that he should be cozying up to Trump as much, if not more, than Democrats. I suppose it remains to be seen. I think Biden does have now more leeway to strike a deal that might be politically dicey if it gets to that point. But he has more bandwidth to do it. I will say, last week as we sat here 1 week ago, people were saying Biden's running, he's dead set on it. By the way, people believe that to be the case. They do not believe that he was days and days hiding a decision. But he had his big defenders, including some publicly, including lawmakers, the Congressional Black Caucus, for instance. In the last 24 hours since his speech, there have not been a lot of second thoughts. You don't have a lot of people thinking, oh, did we make the right choice? Oh, should Joe have stuck around? It seems to be the opposite. It's a sigh of relief that the tension, at the very least in the party, is over, and Harris really has a firm grip, if not 100% locked up the nomination, and it's sort of all systems go. I will note that both Biden himself in speaking to staff and the First Lady in her slightly salty statement did say, we got to rally around Kamala Harris.
Yeah.
Josh, it's great to have you. Thank you for sharing that with us. As always, Josh Wingrove, Bloomberg White House correspondent with The View inside the White House on an historic evening. The images that we were just showing you from the Oval Office are authentic. Those were not staged following the speech. It was not part of the programming. And the same will be today when we get inside the Oval Office with Joe Biden and Benjamin Netanyahu. This is not a speech or a news conference. They're going to be sitting down press pool will be allowed in the room for a moment to get some video, get some brief remarks from the president. If not both, we'll bring that to you when it happens, likely this hour. The press just gathering for that opportunity right now as we add the voice of Carmel Arbit, Senior Fellow for Middle East Programs at the Scowcroft Middle East Security Initiative at the Atlantic Council. Carmel, welcome back to Bloomberg TV and Radio. It's always our pleasure to have you here. Coming off of the speech to a joint session of Congress yesterday, Benjamin Netanyahu brings his message to the Oval Office today. And coming off of this speech from Joe Biden last night, in which he implied the ceasefire in Hamas is going to be his priority as he finishes out his one and only term. Will there be progress made today when these two meet?
Well, thank you so much for having me on again. Bibi is coming off a speech to Congress where he was well received. He enjoyed standing ovations from member of Congress, but wasn't especially substantive in terms of the commitments that he was willing to make towards achieving that ceasefire, which on the one hand, he says he's interested in, and that Hamas is the #1 barrier to achieving. And on the other hand, his political interests have been served, much like they have Haniya and the leadership of Hamas, continuing this conflict. That said, we've heard that they're very close to a breakthrough, that they're getting closer to an agreement that would look at some kind of a short-term, less than 2 months ceasefire in exchange for the release of women, elderly, and injured, that could then be phased into a longer-term ceasefire. So I think the moment is more hopeful than it had been in the last few weeks and months, but let's not hold our breath. It's not done until it's done.
Well, that's absolutely true. And Carmel, I think we should all remind ourselves of the kind of tenor of the speech that we saw Israeli Prime Minister Netanyahu give on the floor of the House chamber yesterday, especially when it comes to what he called his vision for Gaza. This is how he laid it out.
The day after we defeat Hamas, a new Gaza can emerge. My vision for that day is of a demilitarized and de-radicalized Gaza. Israel does not seek to resettle Gaza, but for the foreseeable future, we must retain overriding security control there to prevent the resurgence of terror, to ensure that Gaza never again poses a threat to Israel.
Is that a vision you think the U.S. and President Biden could get behind, Carmel?
Look, I think this is something that Bibi has been saying multiple times in different ways in different speeches. So we didn't really hear anything new substantively from him yesterday. I think the real question is how to achieve a demilitarized and de-radicalized Gaza. And there's no clear path to that. Only about half of Hamas's soldiers have been taken out, about half of the leadership. They're still very far from getting to the point where the Israelis would be able to, quote, claim victory. And so I think certainly everybody is looking for a Gaza that is not occupied by Israel, that is independent, that is peacefully living alongside Israel. But how we get from point A to point B is where we're going to see lots of tension points between both parties.
How different will Joe Biden's meeting be with Benjamin Netanyahu compared to Kamala Harris's meeting later?
Yeah, it's very interesting that they're having these two meetings separately. Of course, as we kind of get ready for what Bibi sees as kind of this lame duck Biden, Netanyahu is really holding out. He thinks that whatever happens, he's going to get a better deal if Trump is in power, because Trump isn't going to extract any concessions from him. And so I think Netanyahu is going to continue to be reluctant to deliver anything that would seem to bolster Biden or kind of help him. Biden's ambitions for an end to this conflict are very lofty. It's not just, as we discussed, a demilitarized Gaza or a de-radicalized Gaza. He's also looking for a grand deal, something that would bring an agreement between the U.S., Saudi and Israel, and then Israel and the Palestinians to the table. And I think that's going to be a huge focus for him in his final months in office, and he'll have time and space to do it. I think Biden is, as he has said, a Zionist, someone who feels very deeply connected to the state of Israel, but increasingly frustrated with Netanyahu. I think Harris is going to be coming at this from a slightly different place. I think she's a bit more pragmatic. I think she's a little bit less emotionally attached to this conflict, but ultimately she's going to continue to toe the line of this administration as vice president. And the only time that that could change is if she's elected president, and will have to start to lay her own path for her relationship with Israel.
Well, Carmel, as you talk about the idea that Biden does seem to want some kind of grand deal here, he did allude to that in his speech last night. He didn't just say an end to the war in Gaza, but peace and security in the Middle East. So while he may be most immediately focused on the conflict between Israel and Hamas, I wonder if you still see room for other conflict areas to open up, considering that Netanyahu in that speech yesterday talked about Hezbollah and that Israel will do whatever it can to secure its northern border. He said, and this is a quote, "Those who attack Israel will pay a very heavy price." Is peace and security in the Middle East as a whole, not just in Gaza, a bit of a reach even for this president?
So I think we have to break down the different pieces of what's happening in the region. I think we've already seen, and Netanyahu referred to an Abraham alliance, something that's been worked on behind the scenes a bit to bring together all of the countries who helped Israel respond to the Iranian strikes on Israeli territory. I think on the one hand, there's a huge amount of potential to bring together, Gulf countries, allies with those who are already allied with Israel, and those who are interested in allying with Israel, like Saudi Arabia, to respond to the threat posed by Iran and its proxies. So I think we have to differentiate. There's a space for cooperation among allies, and there's also a space for a significant escalation in this war. And we have seen now the Houthis are willing to not just strike Israel. The Houthis have struck Israel 200 times. But this past week was the first time where there was an actual casualty, and that prompted an Israeli response. I think we're going to continue to see that escalation, but we're going to see on the one hand bonds that are formed between like-minded allies and escalation with Iran and Iranian-backed proxies.
Benjamin Netanyahu moves on to Mar-a-Lago to meet with Donald Trump tomorrow, Carmel. What's the point? What will they discuss?
Yeah, I think there's going to be a number of different things discussed. One is that there's some tension right now between Bibi and Trump. Trump is frustrated that Netanyahu had welcomed Biden and hadn't, played into Trump's claims of election fraud. So there had been some personal friction points where Trump has said disparaging things about Netanyahu. I think once they're kind of past the kissing the ring formalities of it, they're going to talk substance. And what I would expect is that Netanyahu and Trump are going to talk about what a strong U.S.-Israel relationship will look like under a Trump administration, and how Trump will support Netanyahu, irrespective of what is happening domestically or what is happening vis-a-vis the Palestinians.
Carmel, it's always great to have you, especially on a week like this one where we see Netanyahu spending so much time on U.S. soil, not just here in Washington, but of course in Florida tomorrow. Carmel Arbit of the Atlantic Council, where she is Senior Fellow for the Middle East Programs at the Scowcroft Middle East Security Initiative. We always appreciate it. It's going to be pretty remarkable as we look to get the images from this meeting in the Oval Office between Biden and Netanyahu. It raises the question of how the intensity of these various private meetings with three different either current or potentially future U.S. presidents could go for Netanyahu, how they may differ in tone and in conduct and body language, to your point, Jeff.
That's for sure. And sometimes you can read into that a bit with the extent to which the press is allowed to be exposed to what's happening. Apparently, it was a very brief visit in the Oval Office. We'll have some images and video for you coming up, but no questions were answered, certainly not about a ceasefire. And I think the idea was to get him in, get him out, because this might not be the most comfortable meeting.
Yeah.
Same could be said for Kamala Harris's. To Carmel's point, once we're through the pleasantries.
Yeah, and of course they'll be meeting with hostage families as well in between those meetings. So a lot is ahead on the White House. We're going to have more on this with our political panel next on Balance of Power on Bloomberg TV and radio.
Connection lost.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. An important labor ruling out of California moments ago. Uber, Lyft, and DoorDash can keep classifying California drivers as independent contractors after the state's top court said a company-backed law passed by voters does not wrongly curtail the legislature's power over worker protections. Today's ruling was unanimous. Shares of Uber, Lyft, DoorDash, they're all advancing right now. We got Uber up by 2.1%, Lyft shares up by 0.2%, DoorDash up by 1.4%. A move higher for the Dow, the S&P, and NASDAQ. Right now we have got the Dow Jones Industrial Average back above 40,000, up 465 points, 40,319, a gain of 1.2%. To be clear, the Dow back above 40,000, the S&P up 44 right now, up 0.8%, while the NASDAQ Composite Index is up 119, up by 0.7%. The big story, though, the outperformance for the Russell 2000 index, that index now up by 2.5%. Traders betting that the Fed will be able to engineer a soft landing spurred a rally in riskier corners of the market. Stocks rebounding after yesterday's sell-off that jolted markets around the world. 10-year, 4.24% on this GDP Thursday. We've got the 2-year, 4.42%. Spot gold now down $37 the ounce, down 1.6%. West Texas Intermediate crude oil up 0.6%. So again, recapping, stocks are higher. S&P up 43, a gain there of 0.8%. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where it's certainly been a busy few days, and that continues at the White House today as President Biden sits down in the Oval Office with Israeli Prime Minister Benjamin Netanyahu. This, of course, follows the fiery address Netanyahu gave to a joint session of Congress yesterday, which many Democrats express displeasure with, especially for some of his rhetoric when it comes to the protesters that were here in D.C. and, frankly, Joe, are still present today, but it obviously just speaks to the very politically charged nature of this entire visit. And it comes against a backdrop of course, President Biden having just spoken to the nation about his decision to effectively make himself a lame duck and no longer seek a second term.
Yeah, there are images of Netanyahu and Biden in the Oval Office. They took a couple of moments to talk with members of the press, very brief here, knowing that Netanyahu will also be sitting down with Kamala Harris a bit later on. And then tomorrow, Kaylee, it's on to Mar-a-Lago, and apparently a much closer friend in Donald Trump, who the Israeli prime minister will be sitting down with, I guess, as he hedges his relationships here ahead of November.
Yeah, it was interesting to watch Netanyahu's speech yesterday, in which he did thank Joe Biden for being a friend to Israel. He called him a proud Irish-American Zionist. He thanked him especially for the coordination of intercepting the Iran missile and drone attack back in April. But his words about Donald Trump were a bit lengthier, listing off a long list of things that he said Donald Trump did for Israel when he was president. It seems like there may have been a little more love there, although I guess that's open up to an individual's perceptions.
Donald Trump did another rally yesterday.
He did.
You saw that?
Yes, North Carolina.
North Carolina, one of the 7 swing states we're following here, of course, in our Bloomberg swing state poll. The rhetoric, though, is what we're seizing on here, as some members of the Republican conference in the House refer to Kamala Harris as a DEI hire, a DEI vice president. We have a bit of a taste of Donald Trump's language from yesterday. Let's listen.
We have a new victim to defeat. Lion Kamala Harris. Lion, L-Y-I-N apostrophe. The most incompetent and far left vice president in American history.
So let's debrief on that rally and this language a little bit more with our political panel. Joining us now is our signature panel, Rick Davis and Jeannie Shanzino, both Bloomberg Politics contributors. So we saw that kind of throughout the rally, Rick, as well as it seemed almost every single time he said the name of the vice president, mispronouncing it. It's obviously Kamala Harris, not Kamala Harris. Rick, is this going to work for Donald Trump, or does this risk backfiring on him?
Yeah, clearly his ear's feeling better, because when it was hurting, he wanted to talk about unity. Now he's just back to being the Donald Trump we've known for a decade. Yeah, I don't think he can help himself. I think that this is going to be how he finishes this campaign. A lot of Republicans worried. They saw his speech, in Milwaukee, after all the claims that he was going to be a unifier, use this moment in time, the assassination attempt, as a way of bringing in other voters. Has really reversed itself completely. This is the Donald Trump that started the campaign 2 years ago, attacking Joe Biden personally about his age and acuity, and he's just found his bearings with Kamala Harris. And the reality is, it doesn't seem to be taken off. Even some discussion within the party, people I've spoken to are worried that this kind of approach is not going to work with a fresh, young face compared to Donald Trump. And we even see it some in the polling data already since the convention. So, and since the president's withdrawal from the race on Sunday. So I think he's entering this in sort of his old-fashioned way, but I think that the party is going to be looking for a change in approach if they want to win this election.
Certainly the speaker is, as reports now say, Rick and Jeannie, that Mike Johnson actually had to speak to the rank and file in a conference meeting this week to ask them to tamp down the rhetoric after we heard Tim Burchett call Kamala Harris a DEI vice president. Glenn Grothman said she got the nod here by Democrats this week, quote, because of her ethnic background, unquote, in an interview with CBS. Jeannie, how should Kamala Harris address this kind of talk, if at all?
It is abhorrent. It is racist. It is sexist. It is nothing new for Donald Trump and many of his MAGA supporters. And so the fact that it doesn't seem to be landing is a good sign. But this is what we've grown to know, and what we have, the reason so many Americans are not willing to entertain another Donald Trump presidency. That's why he's got this ceiling he just can't break through. To win elections, you have to reach out. He wanted to run against Joe Biden because Joe Biden was stuck just like Donald Trump is. And Vice President Harris is not. This is going to be a hard fight for her. She's going to have to put up with this racist, sexist language, but she has been doing that for her entire professional career. And so I think from her perspective, she sticks to her argument. She is a former prosecutor. She is the sitting vice president. He is a convicted felon, and she is prepared to match him in debates. She is prepared to go head to head with him on policy issues, because those are areas where she can make a case. Again, it's going to be a hard case, but it's going to be a case that she can make.
Well, I would point out it's not just Donald Trump whose comments have gotten some attention here, but as well his vice presidential selection, J.D. Vance of Ohio, for specifically what he said about Kamala Harris being, quote unquote, childless. We now have the ex-wife of Harris's husband, Doug Emhoff, who, of course, they share his two children. She is their stepmom, defending her on this. We've even seen celebrities get involved, like Jennifer Aniston. So, Rick, what about the J.D. Vance aspect of this? And do you think there might be some buyer's remorse happening within the Trump campaign, not just because of language like that, but because, of course, he was selected before Kamala Harris was understood to be atop the Democratic ticket?
Yeah, these comments made in a 2021 interview with Tucker Carlson kind of branded J.D. Vance as, insensitive on issues related to women, picking a fight then with Jennifer Aniston over the comments. I can only see one resolution of this: a public apology on a neutral network by J.D. Vance in the coming days. They've got to get out of this mix. They're already taking a lot of weight on. They're getting killed with women's voters in all the targeted states. There's some new polling out since the Sunday announcement that shows significant leads by the Democrats with women voters. And frankly, a kind of stagnation with the male vote. You would have thought that with this high testosterone approach coming out of Milwaukee, J.D. Vance really only appeals to male voters, that they would get some uplift, and if anything, it's suppressed the vote. So there's a real problem inside the Trump campaign. They've got a running mate who's started out with kind of a lose-lose approach to being the nominee, and Donald Trump really having a hard time finding his footing with Harris and how to really juxtapose them on a substantive basis. That said, with all the good economic news, if you were giving advice to the Democrats, just talk about the economic performance of our country right now and finish the campaign there, because that is where most of the voters are. They care about the economy and who's going to do the best job for them.
Spending time with our panel, Rick Davis and Jeannie Sheehan Zaino here on Bloomberg TV and radio as we stand by for an important conversation. Bloomberg's Emily Chang will be holding forth with Lena Khan from the FTC a little bit less than 10 minutes from now. We'll bring you that live here on Bloomberg TV and radio. Jeannie, it points us to the Veep stakes. We just spent a lot of time trying to figure out who Donald Trump would tap as a running mate. And you have both just illustrated the backdrop for Kamala Harris's decision. Who are you looking at right now? And is it, in fact, a white male Rust Belt governor? Fill in the blank on the name.
It is. Well, I think there's also the Sun Belt senator you can look at as well. I actually am more around the map, if you will. I do think Josh Shapiro has many people's support and vote for obvious reasons. I would say one drawback to the very popular Governor Shapiro is that he too has a background like Kamala Harris, both prosecutors. So you wonder if in doing something like that, she would be doubling up in the way Donald Trump did with J.D. Vance. But I do think he's leading the short list. I also think that Senator Kelly would be a remarkable choice. He might open up the Sun Belt a little more. And of course, he is an astronaut, so you lead with that. It's hard to go wrong. He isn't quite as energizing on the stump as some of the other folks, but he's a very, very good choice. I also think Governor Cooper, I think that is why, one of the reasons why we saw Donald Trump down in North Carolina yesterday. I think there is some fear that getting somebody more mature, somebody who has been around, and somebody who has spent a lot of time talking about women's bodies and reproduction is something that could elicit some fear. So I think there's a lot of really good choices there. And it looks like we're going to know in the next week, if not sooner.
Sure sounds like it. And we'll be talking to Jeannie Sheehan Zaino and Rick Davis about it, our signature panel. Bloomberg Politics contributors, thank you both, as always, being with us here on Balance of Power. I'm Joe Matthew alongside Kaylee Lyons. We're late to get an update on the news. Let's do it right now with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
All right. Hi, Joe. Former House Speaker Nancy Pelosi officially endorsing Vice President Kamala Harris for president, saying that she is fully capable of leading the Democrats to victory in November. New polling shows Donald Trump leading Vice President Harris in 4 swing states: Arizona, Georgia, Michigan, and Pennsylvania. Now, this Emerson College The Hill poll shows that in Michigan, Trump leads by 1 percentage point and by 2 percentage points in both Pennsylvania and Georgia. All of those are within the margin of error of 3.4%. They are tied in a 5th swing state, Wisconsin, and Trump leads Harris in Arizona by 5 points. And New York Governor Kathy Hochul being sued over her pause on the city's traffic congestion pricing plan by an advocacy group that claims she has no legal authority to freeze it. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street goes risk on after this morning's economic data. S&P up 38, now up 0.7%. The Dow advancing by 1%. NASDAQ up 0.6%. The Russell 2000 up by 2.34%. 10-year yield 4.25%. The 2-year 4.43%. Balance of power continues now. Back we go to Washington, and once again your hosts Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, we thank you, and it's great to see you today on Bloomberg TV and radio. Thanks for being with us on the fastest show in politics as we bring you now an important conversation that you will not hear anywhere else. Our colleague Emily Chang sitting down now with the commissioner of the Federal Trade Commission. Emily, take it away.
Joel, thank you so much. Chair Khan, Lita Khan joining us now from San Francisco. Thanks so much for being with us. I know that you're spending a couple days in San Francisco talking to folks across the tech community. You just got out of speaking with the folks at Y Combinator. Talk to us a little bit about who you're speaking to and why you're here. What's the message?
Well, thanks so much for having me, Emily. And an important part of my job is going around the country and hearing from Americans across markets, across sectors, to understand what are the pain points that they're seeing in the markets that they're trying to work in, compete in, buy in. And so I'm so glad to be here in San Francisco, meeting with folks across the tech community, including founders, including VCs, including startups, and trying to understand, how do we make sure that our free and fair enterprise system can remain robust and that innovation and competition can thrive, especially at this moment of technological change and a potential inflection point.
Obviously, how AI will play out is very much top of mind here. I just spoke with Meta CEO Mark Zuckerberg, who unveiled the largest open source AI model ever this week and really doubled down on what he thinks are the benefits of the open source approach. Take a listen to what he had to say.
The way that we can control our own destiny on this and make sure that we have access to leading AI is by building it and having it become an industry standard, but it actually gets stronger by being able to share it and have the ecosystem around it.
Where do you stand, Chair Khan, on Meta's open approach versus closed source competitors like OpenAI and Google, and Zuckerberg's remarks specifically?
Well, look, without weighing in on any specific company, as a general matter, historically, we've seen that openness and open source can be a critical vector of innovation, right? I mean, what happens traditionally when you render some of these ecosystems more open is that it can lower barriers to entry, it can lower costs for entrepreneurs and startups and really enable them to innovate much more freely. And so we want to make sure that that tradition continues. We are watching very closely. I think there's still an open question around what openness really means in the AI context. Our team has been focusing on this idea of open weight models, which we think could similarly engender a lot of competition and innovation and make it easier for startups and entrepreneurs to compete on a level playing field. Of course, we need to really closely understand what are any restrictions, licensing restrictions that are being included here, and could those be foreclosing competition? More generally, we also need to be aware of how there are significant incumbents that may have an outsized role to be playing because they have key control over the raw material and key inputs. And so we need to be aware of the broader potential competition issues or bottlenecks or choke points that could emerge in ways that could inhibit innovation and inhibit competition. And so that's what we're going to be talking with founders and VCs and others about today.
Something else you've been looking into more recently is surveillance pricing, which is how AI is being used to rapidly change pricing based on consumer behavior. And there are some really dystopian concerns here about how this could lead to dangerous financial targeting. What are some examples you've seen of this, and what are you hoping to find?
So as you know, for years now, Americans have had their personal data and information closely tracked and surveilled by a whole set of companies in ways that can really threaten people's privacy. What we see now is that firms could also be using this enormously personal data about people to also set person-specific prices based on what they know about you, based on what you're feeling, who you're seeing, what you're browsing. And so we want to make sure that we are looking under the hood and understand what's going on here. So for example, you can imagine that a hotel that knows you've already bought plane tickets may show you a higher price than they show somebody who hasn't really decided on where they're going to visit. You can imagine a restaurant that knows you have a 1-hour lunch break could hike prices for you during that hour. And so these are just some of the types of practices that we could see take hold if this type of surveillance pricing is allowed to develop.
Interesting. We're all still feeling the effects of this CrowdStrike outage, and so many people are shocked about how a company that is so small could just shake up the world like this. What's your take on this, and is there something to investigate here?
So as a general matter, I think this really underscores the trade-offs between kind of fragility and resiliency, and how when you have more centralization or when you have enormous dependence on just one firm or a very small number of companies, that can make it so that a single disruption can have cascading effects and really lead to all sorts of breakdowns. And so as a result of this one incident, for example, we saw over 3,000 flights grounded. We saw doctors that were no longer able to, prescribe medicines for their patients. We saw courthouses that had to close off proceedings. And so the impact here was significant, and it's really underscoring the importance of making sure we have resilient markets and resilient systems so that a single crash like this doesn't lead to so much outsized disruption.
I do have to take a moment to talk about the presidential election. A number of prominent tech folks have endorsed President Trump for a variety of reasons, but I have heard specifically multiple tech executives and investors complain about how they can't do deals on your watch. Do you have any concerns that your agenda has at all alienated the tech community, or could impact the impact of your agenda going forward?
It's been such an honor to serve in the Biden-Harris administration, and, we're just focused on doing our work. What I oftentimes hear from the business community, including small businesses, including entrepreneurs, is that they want markets to be more open and more fair and more competitive, rather than incumbents being able to squash out nascent competitive threats. I mean, our free enterprise system is one where the best ideas are supposed to win. And we've historically seen that it's the disruptors and entrepreneurs that have been a key vector of innovation. And so our job at the FTC, when we enforce the antitrust laws, is to make sure that our markets stay open and fair and competitive. And that's something that, most businesses and most entrepreneurs should really be able to get behind.
Former President Trump's running mate, J.D. Vance, has actually praised your work. In fact, I believe he said that you're one of the few people in the Biden administration that's doing a pretty good job, in his opinion. What do you make of the irony there? And how do you see the FTC moving forward in the next administration?
So I won't speculate about what's going to happen in November. I do think we see enormous bipartisan agreement that we need to reinvigorate and double down on antitrust enforcement. We need to make sure that monopolies can't illegally use their power to jack up prices for consumers, to really undermine workers, or really stamp out entrepreneurs and small businesses. And so that bipartisan agreement around the importance of open, fair competition to protect our free and fair enterprise system is absolutely critical. I mean, just the other week, the FTC released an interim staff report looking at the practices of the pharmacy benefit managers and some of our initial findings. And, that's an area, for example, where we see enormous bipartisan concern on both sides.
Interesting. All right, Lina Khan, Chair of the Federal Trade Commission, spending a couple of days out in San Francisco. Thank you so much for joining us, Chair Khan. Joel and Kaylee, I'll send it back to you.
All right, Emily Chang with the Chair of the Federal Trade Commission, Lina Khan. Great interview. Thank you so much, and especially interesting to us here in Washington. Her comments on the presidential race, which of course she did not want to weigh in on whatever the outcome may be in November, but this idea that it does seem to be more bipartisan now potentially than it was, Joe. That politicians on both sides of the aisle are in favor of an antitrust agenda. Maybe more pro-competition, less pro-M&A?
Well, certainly if you ask J.D. Vance, I'm really
Yeah.
glad that Emily asked that question because
Yeah.
this is all we were talking about in Milwaukee. How does this happen? How do you have this on the same ticket? But of course, we know that Donald Trump will probably set the table when it comes to policy if he wins. But also, the way she framed that question, I think the second to last question, she's still hearing from a lot of folks in high tech who say they just can't do deals as long as this is the architecture. And you wonder how long that can stay that way.
Yeah, interesting to see in the last 24 hours the circulation of Reid Hoffman's comments around the FTC after just donating millions of dollars to Kamala Harris. He, of course, one of the big donors to first come out and endorse her after Biden dropped out on Sunday. So it's definitely a live conversation in this election cycle, but it does have an impact potentially on merger activity as we move forward into 2025. So here with more is Jennifer Rhee. She is Bloomberg Intelligence antitrust litigation analyst. And Jen, you have a piece out that effectively looks at how the election ultimately matters for the antitrust environment. And is the answer potentially that either way, a Trump-Vance administration or a Harris-whomever administration, there may be a lot of similarities?
Yeah, I really think there are similarities there. And I think that Lina Khan is right, that there is bipartisan interest right now in antitrust. But I do think there could be some slight changes. And I think that the odd thing here for me is I am beginning to see a little bit of a flip of this sort of standard political orthodoxy about how we think about these two parties vis-a-vis antitrust. I mean, for many years, the Republican-led administrations tended to be more business-friendly and the Democratic administrations less so. Now, I think it was really mostly on the edges, but that really has been consistent. And in this case, I'm actually beginning to feel that if a Trump-Vance ticket wins in November, that we could actually see the continued toughened antitrust exactly as it is, and maybe even more so than we've had for the last 3 years, and perhaps a little bit of an easing under Kamala Harris.
Wow, that's saying a lot.
Yeah.
Jen, is that because of the J.D. Vance effect, or just the sort of more isolationist view that Donald Trump brings to the table? Because people thought if Trump gets reelected, it's open season.
I think it's both. Now, we have to realize that antitrust really started to tick up under President Trump. It wasn't just Biden administration. He kind of took the ball and ran with it. But the challenges to mergers started to tick up under President Trump, much more so than the 3 administrations before him. And also, all investigations of big tech companies started under Trump, and the lawsuit against Meta was filed under President Trump's administration. So we already know that to some extent, he's willing to go that direction on antitrust. And then you add J.D. Vance. Now, Lina Khan is also correct that, or actually you said this, Joe, that it's Donald Trump, if he's president, that's going to be making policy. But J.D. Vance, as his vice president, has his ear. And if they're aligned on this, then he may defer to J.D. Vance's views or defer to J.D. Vance on who to appoint at the FTC and DOJ, who will be the ultimate decision makers on antitrust matters.
Well, it's an excellent point, Jen. The idea that what the president has power to do to control an antitrust agenda is to appoint the regulators who oversee it. The problem is you have Congress to consider here, too. It's not just the presidential outcome that is uncertain, but also the balance of power in the House and in the Senate. How should we be thinking about the actual legislative chances of some antitrust legislation getting through?
Antitrust legislation is really tough. It's been hovering out there for 4, 5, 6 years. But I think the problem is that even where there's bipartisan interest, the parties are coming at it from 2 different perspectives. The Democrats are a lot interested in curbing power, more interested in curbing power, curbing dominance, controlling the conduct of companies, particularly big tech firms, and in the healthcare markets too. Whereas I think the Republicans are more interested in what they view as the censorship of conservative content, where the message is placed out there on a platform. So they want to do the same thing, but they're coming at it from different directions. And I think that makes it really hard to get together on the details. And that's why I think it's going to be tough to get any antitrust bills passed. Now, it definitely depends on the makeup of Congress, but at least if things are divided, I think it's tough.
Jen, we've only got a minute left, a bit less. I don't want to cut you off, but can we assume that Kamala Harris will have the same approach as Joe Biden when it comes to antitrust?
I don't think so.
Should we not make that assumption?
I just don't think so. I think she's a little more measured. I think a little more pragmatic from what I've been reading about her, what I've heard her say in the past, and maybe not quite as rigid. There's been this real rigidity in the antitrust community, the enforcers under Biden, and maybe some of that rigidity will loosen up under a Kamala Harris. Again, it depends on who she appoints to the decision-making positions.
All right. Jennifer Rhee, Bloomberg Intelligence Senior Litigation Analyst, with us live from New York. Jen, it's great to see you. Thank you so much. We wanted to have a moment to distill that conversation. And thanks as well to Emily for bringing us Lena Khan, Kaylee. Really interesting stuff today that gives us a sense of what we might be stepping into, or at least some options.
Yeah, what the regulatory environment could look like heading forward into 2025, no matter who wins the election, is certainly something to consider as we tease out these policy ideas, how markets should be looking at this election, which I think we can all agree has gotten a whole lot more interesting in the last week.
You said it. We'll have a lot more on that. And of course, Benjamin Netanyahu's visit to the White House on the late edition of Balance of Power. We'll meet you there at 5 o'clock Washington time, only on Bloomberg.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. I'm Carol Masser along with Tim Stenivek, and yes, indeed, this is Bloomberg Business Week. Gotta say, Tim, the setup on this Thursday, July 25th, a little bit different from yesterday.
Quite a bit different than yesterday. U.S. growth doing okay, so it gives the Fed a little bit of breathing room. On that, we're seeing stocks settle down after that sell-off that wiped $1 trillion off the NASDAQ 100 yesterday. We're going to have much more on today's trade and the economic data behind it in just a minute.
Yeah, and top of mind for us, let's just go there, is that U.S. growth report showing both consumers and businesses are still spending. We've got the details, and we're going to get a little bit deeper into the trade off of it when it comes to the U.S. rates curve and U.S. Treasuries, as well as a little bit more on the equity side.
Yeah, and plus, have you seen shares of Ford today? They are just sinking right now. We're going to break down the report and get into what feels like the woes of big auto. At one point, Carol, down 18%, now down over 17%.
It's a huge drop. And one more thing, Chipotle actually going to splurge on bigger portions to keep diners happy. That's going to make you happy.
Was it Chipotle Summer? What is it? Chipotle Man? I don't know.
What?
There's like the Chipotle Boy Bowl. I don't know.
Anybody?
Yeah.
Bueller?
It was something like that.
Nobody. All right. We'll get back to that. We'll check on that. We'll Google that. First up, though, let's get a check on the trade today on this Thursday. Here's Charlie Pell.
All right, I thank you very much. Chipotle right now, downsizing. It is trading lower. Chipotle down 1.5%. We've got stocks pushing higher, as Carol mentioned, a dramatically different tone to the market right now compared to this time yesterday. S&P up 32, 54.60 where we stand, right to the numbers here, by about 0.6%. We've got the Dow up 362, up 0.9%. The Nasdaq Composite Index now higher by 106, up by about 0.6%. The outperformer by far cannot ignore what is going on with the Russell 2000, again surging another 2.2%. And to put that in context, S&P up 0.6%. The 10-year right now yielding 4.26%, with the 2-year 4.44%. Spot gold down $40 the ounce, a drop right now of 1.7%, 23.57 the ounce. And West Texas Intermediate crude up 0.7%, 78.18 a barrel. Carol mentioned the automakers. Ford having their worst drop in 4 years after that big earnings miss that the automaker blames on a surge in warranty repair costs for older vehicles. Ford shares trading lower by 17.4%. Elsewhere, Stellantis has started floating the possibility of selling one or more of the auto giant's 14 brands. Stellantis down now by 7.1%. General Motors down by 4.2%. So again, recapping, stocks higher across the board. S&P right now up 30 points, a gain of 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And it was the Chipotle Boy Bowl.
Yeah,
Sorry
we
about
talked
that.
about
I couldn't
this, Carol.
remember. I know. Well, there's a lot that's coming at us.
It's been a busy
if you haven't
summer.
noticed. All right, including lots of surprises, including this morning when it comes to the U.S. economy. U.S. economic growth accelerating by more than forecast in the second quarter, illustrating demand is holding up under the weight of higher borrowing costs. The economy's main growth engine, personal spending, advancing 2.3%, also more than projected.
Meantime, a closely watched measure of underlying inflation rose 2.9%. It eased from the first quarter, but it is still above estimates. That's according to the Bureau of Economic Analysis in the report this morning. So let's get to it, Carol. The latest on the economy and how it's reflected in the U.S. rates market and what it means for Fed policy.
All right, back with us are two Michaels, Bloomberg News international economics and policy correspondent. In fact, for the next 20 minutes, it's all Michaels, guys. I'm just going to tell you. Bloomberg News international economics and policy correspondent Michael McKee, along with Bloomberg News rates reporter Michael McKenzie, both lucky for us in studio. All right, Mike, I was listening to you breaking it down this morning. This was a strong report.
I'm hungry. I want that bowl.
You want the Chipotle Boy Bowl?
Are you in Chipotle Boy Bowl?
It was definitely a stronger report than anticipated, and it was the composition of it was very good for the overall economy because it was basically stronger consumer spending and stronger business spending, and this wasn't one of those where it was inventories and trade that tricked things up, although trade was a big drag and inventory is a big gain, but they sort of offset each other. So you look at the spending numbers, and consumption was still good. Now, since then, we've had some data that suggests the economy is slowing, but you can see the way the market repriced after the data today that people are thinking the Fed doesn't have as urgent a task in cutting rates.
Well, that's my next question, Michael McKee, is how does it change Jay Powell's move and the Fed's move next week, or lack thereof?
Yeah, it doesn't change it. There was a feeling that they didn't need to cut anyway. They've gone into the blackout period without suggesting that because the markets had done their work for them and started pricing in 3 rate cuts over the next 4 meetings, and that would include September as a start, but since they'd priced ahead, they basically had a rate cut. Now, a lot of that's washed out of the market today and the strength of this, but it hasn't changed the view that we're still going to see a September rate cut and then probably one in November and maybe December as well. So it doesn't really change it a whole lot. The inflation numbers you mentioned, Tim, they were not as good as expected, but they're less important to the Fed because they're quarterly averages, and the PCE inflation numbers we get tomorrow for the month of June will be much more important to them. But the thing about both of the numbers that came out today, the headline and core on a year-over-year basis, they went below 3%. And so we're getting into the territory where the Fed has said it will cut rates.
Getting ready to bring out the champagne. So Michael McKenzie, come on in on this. Should we get ready to break out the champagne? How are you seeing it?
Not yet. I think the bond market got pretty excited this week. But it's now back to sort of pricing in on 65 basis points of cuts for this year. So you're sort of looking at 60% odds of a third cut. It's come back a bit from this morning. We had an October Fed funds showing there's a 20% chance of a 50 basis point cut in September. That's now come back to around 10, 12%. So that was sort of doing the rounds. I mean, I think if you look at what's happened in the last few days, we kind of got a foretaste of this when we saw a record demand from investors on Tuesday for a 2-year sale. And that told you that people now know that the Fed is in play. It doesn't matter if it's going to be a couple months down the road. You need to start moving from cash and start parking some money in that 2-year around 4.5%.
Because this might be as good as it gets.
This might be as good as it
gets. For a while, yeah.
There's a lot of chatter in the market about how lower income consumers are suffering. We've had a lot of earnings reports where companies have talked about, the consumer isn't happy. We don't have pricing power anymore. You've kind of got Chipotle now saying they're going to go back to giving people bigger orders, which will really make my son and his teenage friends really happy, because that's where they go
Bring it
after
on.
school.
Yeah.
So the bond market here is beginning to sniff out a slowdown in the economy and a need for some rate cuts. And in particular, as Mike McKee just said, as inflation's been coming down, that funds rate's been stuck there for the last 12 months. So policy is becoming more and more restrictive. And it is starting to show up. And this is why the bond market feels pretty confident. And you're seeing this because the yield curve is getting closer and closer to no longer being inverted between 2s and 10s. 5s and 30s broke out this week again to new highs since last year. And that's where a lot of asset managers are very happy because they love owning the 5-year. They don't really want to own the 30 at this point.
Well, so does this mean, Mike, we escape a recession and that the soft landing, like, here we are, guys?
Well, it's not a guarantee, but it certainly puts a thumb on the scale of the idea that we have a softer landing and not a recession. We'll have to see how the third quarter numbers develop as we get deeper into it. But when you're looking at GDP of 2.8%, that's almost a full percentage point above what people consider potential. And then you've got inflation going down. Markets obviously are fickle. And tomorrow, if we get good numbers on inflation, they could go down, but maybe there's an upside risk to personal spending given what we've seen today. So they'll try to figure it out. But at this point, you just have to say the Fed is probably going to not do anything next week and then signal a September cut. And when that happens, then the market probably reprices, bonds go up and yields go down because people are starting to think they're coming that way.
Mike McKee, it's interesting because we have gotten a couple prominent voices calling on the Fed to make certain moves. For example, Bill Dudley yesterday said, I changed my mind, the Fed needs to cut rates now. We talked about this yesterday a little bit. And then Mohamed El-Erian out with the Bloomberg opinion piece that says the Fed may be 2 meetings from a policy mistake, urging that they should not delay an interest rate cut beyond September. How should our audience take these?
Well, Bill Dudley was on Bloomberg television today at 8:15, right before the numbers came out, and I wonder what he would have said had he still been on the air, if he'd still think they need to cut next week.
Maybe higher for longer still.
But my good friend Mohammed raises kind of a straw man about 2 meetings because the Fed doesn't know what it's going to do. It's really taking this meeting by meeting. They're moving towards rate cuts, and there's no reason to think they wouldn't do one at this point in September. So I think the idea that they would skip September is maybe kind of just a rhetorical
Yeah.
thing at this point. They haven't given us any reason to think that they would.
I want to go back to Michael McKenzie, asking Mike about, soft landing. What are you hearing? Because I still think about how long we had that inverted yield curve, and doesn't at some point that kind of smack us in some way? But, I don't know. Do you think we just see this soft landing or what are you hearing from traders?
There's a lot of concern about the sort of lower income consumer. We're still in this K-shaped economy.
Bill Dudley kind of brought that up.
Yeah,
Right? Wealthy
and
consumers are okay, but
wealthy consumers are fine. The key point here to watch is the labour market. If unemployment starts to pick up, if layoffs begin to accelerate. I mean, today, the other good part of the data today we saw was jobless claims. We didn't. Continuing claims has been something that's been on a lot of investors' radars. That came back a bit. So again, but there's a long stretch between the July meeting next week and the September meeting at the Fed, and that's what a lot of people in the bond market are looking at, saying, okay, we're going to get a lot of data into that September meeting, and by then we should have a pretty good idea whether or not the Fed can go 25, but more importantly, do they do another 25 relatively quickly after that? Or if you get a real sign of weakness in labor, does it begin to sort of arouse that 50 basis point cut? And again, it's very unusual for the Fed to start any easing cycle with a 50 basis point cut.
Oh, very, very briefly, the sizable change in labor. What's the number, Michael McKenzie, to look for? Very briefly, what would scare the Federal Reserve?
Something close to zero or negative. I always remember back in 1992 when the August payrolls were massively negative and the Fed actually cut.
So it has to be that drastic.
It has to be very. I mean, it has to be a genuine shock.
Yeah.
For the Fed to sort of say, okay, we are behind the curve, and nothing suggests that they are at this point. And what the market is saying is that they're just pricing in that sort of tail risk. And part of that's because there is such a long gap between the July meeting and the September meeting.
It's a long time, those dog days of August or dog days of summer or whatever you call it. Last question to you in terms of the job market, because we have seen increasingly the Fed, Jay Powell in particular, remind us it's a dual mandate. You're talking a lot more about the labor market.
Well, they've been watching the labor market because it has been weakening a little bit. The bad thing about next week is that they don't get the jobs report before the Fed meeting. But if the unemployment rate rises to 4.2%, which is not what's forecast, but if it did, that would trigger the Somme rule, and then that would scare the horses, because then everybody starts to think, well, we're going into recession because it's always said that before. Now, Fed doesn't think this is completely accurate because a lot of it's driven by a rise in the labor force, but Bill Dudley noted that happened in the 70s too, and we still had a recession. So next Friday is going to be a very interesting day too.
It's just all these points, as we said, a lot of stuff keeping us on our toes. Michael McKee, thank you so much. Always appreciate it. Michael McKee, of course, international economics and policy correspondent here at Bloomberg News, and our thanks to Michael McKenzie, rates reporter at Bloomberg News as well. And I feel like our Michael Palooza continues.
Michael Palooza it is. We now get to the equity play off of this morning's stronger than forecast GDP report. This after yesterday's stock sell-off, which wiped $1 trillion off the NASDAQ 100. Wall Street traders betting that the Fed will be able to engineer a soft landing did spur a rally today in riskier corners of the market, with stocks, Carol, rebounding after a sell-off that jolted markets around the globe.
All right, so let's get to it. Let's bring in Bloomberg Intelligence equity strategist Michael Casper here in studio. So, Michael, we've talked about kind of the equity, certainly the equity reaction we've seen to that better U.S. GDP report. We've hinted on it. Walk us through it, because we're almost a 1/3 of the way through earnings. Are earnings justifying some of the moves that we're seeing in the market? Maybe a slight pullback, but maybe some momentum once again to the upside?
Yeah, certainly in the S&P 500, right? So you've got significantly better than expected earnings results for the S&P 500, so large cap stocks, and that's driving a lot of this rotation, right? So you've had tech leading the way in 2023, and now you've got that kind of seeding some of the growth towards some of the cyclicals, so stuff like energy is coming online, healthcare coming online, a lot of different sectors starting to kind of confirm the rally in EPS, and that's kind of driving a lot of the rotation, at least within large caps.
There are some mega cap tech stocks, though, that have reported in recent days, and it hasn't been so good. Tesla and Alphabet certainly are the ones that I'm thinking of. And then in a totally different area, you had Ford report yesterday, and you're seeing shares just slide today. How do those numbers, How do you think about those numbers in the context of what you just said?
Yeah, I think they were relatively mixed. They were kind of somewhat in line, at least with Google's big report, but
no sort of canary in the coal mine.
Yeah, no, not necessarily a canary in the coal mine. Actually, what I would say is that this rotation feels very healthy within large caps, right? So you've got the tech component and the tech related component trading at pretty high valuations. They peaked around 28, 29 times historically. That's right about where they are right now. And you've got earnings growth for the rest of the index starting to catch up. So it's pretty healthy rotation, I think, in large caps.
Having said that, I got to say, one thing that struck us this morning on our read-in, research, I believe, from your team, from the Bloomberg Intelligence team, about how with almost a third of S&P 500 companies reporting those second quarter results, spotlight increasingly on sales, only 43% of companies have managed to beat revenue expectations, which would be the lowest reading in 5 years, according to BI data. Is the quality... Earnings, we know things can be done. Top line revenue growth, not so much. The number, excuse me, is the number. Is the quality of the quarterly results, especially when it comes to revenues, coming down?
I don't know that it's coming down. It's certainly been a margin story, both this quarter and for most of 2023. So if you think about last year's results as we were clawing our way out of the earnings recession for the S&P 500, it was really a margin-driven story, and that continues to be the case. Now, if you look at forward expectations...
So margins are holding up?
Margins are holding up. Margins are improving significantly from those inflation-driven lows from 2022, and that's still the story now in 2024. But as you look at the forward expectations for revenues, those are still pretty solid and improving, and also, I would even note in the small cap space, the revenue expectations are improving for the next 4 quarters. So you've kind of even got these economically sensitive small caps, maybe going along with the GDP report, also showing stronger revenues over the next year. So while it is a margin story right now, revenues are expected to come online soon.
When do we start to see the promises of efficiencies of from AI actually starting to affect margins?
If he could answer that, he would be on his island in the South Pacific.
Because the investment has been so big from some companies out there right now. When do we start to see that investment pay off?
I think that's definitely a longer dated story, right? So we're talking years out. It's something that's not necessarily going to filter through 2Q. Obviously, it's spending on the revenue side for the companies that are having that allocated towards them. That'll help, but I think it's a longer dated story for AI to drive some of these efficiency gains.
I mean, so at this point, we just talked with our economic and rates team, and it feels like that soft landing seems to be in place. Is that safe to say that's what we're seeing from earnings so far, easily, or if not better?
It seems to be the way that we're definitely trending, right? So you've got the better GDP report. You've got CPI starting to come down, PPI also coming down. The Fed has a lot of leeway to do whatever they feel like they need to do, be it more rate cuts than consensus expected just a few months ago, or taper the balance sheet even less than they have been, right? So giving them a lot of leeway at the end of the day, and that certainly can help companies going forward.
Always nice to have some leeway. All right, going to leave it there. Hey, thank you so much. Michael Casper, Bloomberg Intelligence equity strategist. Coming up next, a major speed bump for shares of Ford on a profit miss. I mean, that stock is just getting hammered here today.
Yeah, down 17.4%. A worst day, Carol, in more than a decade at this point.
All right, that story, we're going to get back to that in just a moment. It's coming up on Bloomberg Business Week. Right now, the S&P 500 up 22 points, the NASDAQ 100 a gain of about 32. We're looking at the Dow Jones Industrial Average up more than 350 points. You are listening and watching Bloomberg Business Week. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks advancing. Wall Street goes risk on after this morning's economic data. The Dow, the S&P, NASDAQ all advancing. We're off session highs, but still looking at a 20-point gain in the S&P to 5447, up by about 0.4%. The Dow, 40,200 right now, up 345 points, up 0.9%. And NASDAQ is up 33, higher by 0.2%. Perhaps the bigger story, though, the resurgence in the Russell 2000 index of small cap shares. We've got the Russell 2000 rebounding today by 2%. 10-year 4.25%, the 2-year 4.43%. Spot gold down 1.7%, down $40 the ounce to $23.57. And West Texas Intermediate crude now up 0.8%, 78.23 for a barrel of WTI. Traders betting that the Fed will be able to engineer a soft landing, spurred a rally in riskier corners of the market. Stocks rebounding after yesterday's sell-off that jolted markets around the globe. A Colorado judge has issued a temporary order blocking the proposed $25 billion merger of Kroger and Albertsons, which has been challenged by the state attorney general. Shares of Albertsons, they're trading higher by 0.7%. Kroger, meanwhile, down 0.8%. Again, recapping, stocks are higher. S&P right now up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, ouch. Ford shares tanking, down the most in more than 15 and a half years. Right now, down about 17.5%. At its lows, down more than 18%. The biggest intraday fall since November of 2008. Remember that time period? Ford's drop coming after the automaker posted second quarter profit that fell short of Wall Street estimates. The company talking about quality problems with new vehicles, Tim, that led to a surge in warranty costs.
It's something that the company is focused on to fix. That's according to Ford's CFO John Lawler on Bloomberg. Check it out.
We're working on reducing our costs intensely. It's an incredible focus by the team. Really, it's a quality and cost reductions. That's our opportunity in the near term to really improve the business. The team's focused on it. There will be additional cost reductions.
That's Ford CFO John Lawler earlier on Bloomberg. With more on Ford and the global auto group is Bloomberg News Detroit Bureau Chief David Welch. He joins us from our Detroit Bureau. David, it certainly feels like a rough road for some of the automakers who have reported thus far. I do want to start with Ford and get an understanding from you about why we're seeing investors react like this. After all, John Lawler did say that we can't read this quarter as the year is coming off track. It's not.
Well, look, you've got a couple fundamental problems that are going to be difficult to fix. They've been trying to deal with this warranty cost and quality issue for a couple of quarters now, and it's just been a constant drag. So in the eyes of investors, this is a moving target, and they just can't seem to hit it. And it's difficult for analysts and investors to see where and when they're going to get that problem fixed and when it will stop being a drag. So that's number one. Number two is $1.1 billion loss in their electric vehicle business. Like everybody else, Ford needs to sell EVs to a certain degree to build this business because it is the long-term future for transportation, but also they need those credits to meet their regulatory requirements going forward. If you're selling a lot of pickup trucks and SUVs, you need to sell hybrids and you need to sell electric vehicles in order to meet those numbers. So if you're selling those at a great loss, that's also a problem. And so how do you get out of that mess if every one you sell is costing you at least $10,000? So, these are both structural problems that the company seems to think they can fix. But if you're an investor, you have no idea how quickly they're going to be able to do it. So they're fleeing the stock today.
Hey, David, for you and the team who cover this group and Ford specifically, I mean, going back to what the CFO said, that, that this isn't a quarter where we're coming off track. It's just not. Does it feel like it's coming off track?
It doesn't really inspire a lot of faith that they can do it because they've had these same issues for a few quarters now. I mean, the quality and warranty thing, and even in years before this, they've had a difficult time with basic vehicle launches and just getting vehicles out like Bronco, like Explorer years before that didn't have quality problems or didn't have delays. So it does lead investors to think, okay, what's going on here? This is the fundamental basics of car making that Ford is having problems with. Remember when we had production hell at Tesla, everyone said, hey, the conventional car companies, they put new vehicles out of muscle memory and there aren't these problems. But here we do have these problems. So look, Lawler's saying that the end is in sight on this thing, but why would investors sit around and bet on that when there are other places they can put their money?
Well, remind us what happened with Ford. I mean, this is a company that's been creating vehicles for over a century. Why is there the warranty issue right now?
Look, it's hard to say what the issue is internally. They've just had quality issues, and when you have that, consumers bring the vehicles back. They pay the dealers to fix it, and it just keeps costing the company a lot of money. They have to put money into warranty reserves. All the companies do this, but it's been difficult for them to fix. People ask me this all the time. Why can't Ford get this behind them? And it's just tough to really get an answer without sitting down with their quality people and engineers and saying, hey, what's going on?
What do we know about where the issues are, not internally in the manufacturing process, but where they're manifesting when it comes to complaints from consumers and when dealers need to fix?
I don't know, exactly, what the biggest complaints are per vehicles. I mean, you could go back through, some of the things like Consumer Reports and J.D. Power. Those surveys often flag a lot of things that people have issues with. But when the costs are this big, it's probably in multiple places, and just kind of it's hard to put a finger on. Hey, it's this vehicle, it's this one thing. It's a pretty big cost item that they've been dealing with.
All right, so David, let's go to Stellantis, right? Maker of Jeeps, Fiats, Peugeots. Yesterday they reported net income that almost halved in the 6 months through June after they had a massive sales drop in the United States, also Europe. What's their story? And we know the CEO joined Surveillance earlier and talked about the possibility of maybe shedding some of the company's, 14 brands. So talk to us a little bit about the Stellantis story.
I've wondered for a long time when they would shed some of those brands because I don't know if you guys remember this, but pre-bankruptcy, General Motors had 8 brands, and this is when they still had Hummer as a separate brand, and there was Saab, Pontiac, and they got rid of them. They got rid of Oldsmobile 20 years ago at least because they were expensive to run and the volumes went down. And I think that's one of the cost issues, at least in North America, that Stellantis is dealing with, is some of these brands, there's still a cost of marketing them and running those dealerships, even if the dealerships are combined. And when the volumes get low, they weigh them down. That's not their biggest issue, though. Stellantis' biggest problem is the North American business is a very big profit center for them. Over the past 5 years, their sales of Ram pickup trucks and their sales of Jeeps have gone down a lot. This is a market that only buys SUVs. Honestly, as I look at this, I'm thinking to myself, how do you lose sales with Jeep when the market is, 2/3 SUVs and 80+% pickup trucks and SUVs, and they're one of 3 players with really competitive full-size pickup trucks. So Ram shouldn't be losing this much share to Ford and General Motors, but sales have gone down. So those are big issues for them. That's why sales are down. And they're still making money, but those 2 brands right there, that's a big gap in expected profit. And look, Jeep, they've kind of gone up in price on that. They may have gotten greedy. My bureau mate, Gabby Coppola, has written some stories about that. I think that's one of the things where they've lost sales is some of the Jeeps that were more accessible to either entry-level or middle-income buyers have gotten priced out of range, especially a period of high interest rates, and there is more competition, but it's such a great brand in the SUV business that they should be doing much better with it. The Ram's a little bit long in the tooth now. You've got fresher product from GM and Ford, and that always happens in the pickup business. There's always leapfrogging. Whoever has the freshest truck tends to get the sales and get better pricing, but it's been a very successful franchise for them, and you have to think that some of the cost-cutting that Tavares has done has put off freshening some of these products, and maybe that's an issue. Maybe he's cut into muscle in his effort to get out all the fat.
So if Tavares says, as he did this morning, that they could shed 1 or more of the 14 brands, what does shed mean to you? Does that mean they sell the brand, or does that mean they sunset it?
Probably sunset it because he's not going to get rid of Jeep or Ram trucks or one of the big money makers or high volume brands. We're talking about things like the Chrysler brand, which sells a minivan, the Dodge brand, again, very small brands. I don't know who would want to buy those. Maybe somebody would, but it's not like they would get a big purse for selling them. So you're probably talking about sunsetting it in the same way that General Motors tried to sell Saab. It didn't happen. There were a couple of failed attempts. They even tried to sell Hummer. There were failed attempts to sell that deal, and they just ended up keeping it. So I could see some of those smaller brands go by way of Oldsmobile, Pontiac, and that sort of thing. And, just getting the costs off their books and allowing engineers and managers to focus on the remaining brands. There's a lot of value in doing that.
I mean, Carol, it's pretty wild to think about an iconic American brand like Chrysler or Dodge being sunsetted and just going away.
Yeah, I mean, if you think about the changes that we've seen, especially coming off of the financial crisis, that was certainly a big change for that brand, right? We used to talk about Chrysler independently, and it's just not the case anymore. Having said that, one name that still is one of the old iconic brands, General Motors. David, they reported earlier this week, profit was up 60% from a year ago. They beat Wall Street expectations. The stock was lower, though, on the day that it came out. We've seen analysts downgrading the stock, but upping their price target. GM, how are they doing on a day when we saw a story about Cruise that you actually put out? How are you thinking about General Motors right now? And just got about 30, 40 seconds.
Sure, when I looked earlier, their stock was down too, just not nearly as bad as the drops at Ford and Stellantis.
Yeah.
But GM is actually operating pretty well. Their profits are up. They were bigger than expected for the second quarter and first half of the year. The reason the stock was down is since they did raise their guidance, probably conservatively, it implied that the second half wasn't going to be nearly as good as the first half, so I think investors said this is as good as it gets. Some of the counter argument to that is GM is always conservative with their guidance. They always are nearly always beat it, and then they raise expectations, or they raise their guidance again. And so some of the analysts are saying, hey, buy the dip because GM always does this. They're always very conservative, very cautious, and then they beat it. So, we'll see what happens, but I think fundamentally GM isn't showing some of these issues like declining SUV sales or quality problems that the other two are.
All right, we're going to leave it on that note. GM shares, as you mentioned, David, down about 4%. That's Bloomberg News Detroit Bureau Chief David Welch joining us. Hey, still ahead, staying downstream of the Fed's liquidity river. We're going to get into that. That's more on the other side of the break.
Before that, though, check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in D.C. Hey, Amy.
Hey, Tim. Former House Speaker Nancy Pelosi has endorsed Vice President Kamala Harris for president.
Make no mistake, this is a politically astute vice president of the United States. I've seen her in action. I can talk about it on another occasion at more late, but let me just say, she is capable officially, personally, and politically to lead us to victory in November.
Pelosi speaking at an event for Democratic women in Washington. Vice President Harris addressed the American Federation of Teachers National Convention today in Houston, Texas, saying she's a product of public education and she still remembers her first grade teacher.
So it is because of Mrs. Wilson and so many teachers like her that I stand before you as Vice President of the United States of America. And that I am running to become President of the United States of America.
Harris thanked the AFT for becoming the first union to endorse her for president. A new poll shows Donald Trump leading Kamala Harris in 4 swing states, but in 3 of those states, the lead is within the margin of error. The Emerson College The Hill poll shows Trump's lead in Arizona is 5 points, but in Georgia and Pennsylvania, the lead is 2 points, and in Michigan, he leads by 1 point. Trump and Harris are tied in Wisconsin. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We do have stocks well off session highs, but still looking at a lot of green for the Dow, the S&P, and NASDAQ. Right to the numbers, S&P 500 index up now by 17 points to 5444. That is a gain of 0.3%. We've got the Dow up 322 points now, up 0.8%. The NASDAQ Composite Index up 35, higher by 0.2%. The Russell 2000 Index, the outperformer by far, up now by 1.9%. Again, the S&P, to put that in context, up 0.3%. 10-year 4.25%, the 2-year 4.44%. Spot gold down $38 the ounce to $23.58, down 1.6%. And West Texas Intermediate crude up 0.8%, 78.23 a barrel. Traders betting that the Fed will be able to engineer a soft landing are spurring a rally in riskier corners of the market. Stocks rebounding today after yesterday's sell-off that jolted markets around the globe. Ford shares are slumping after that big earnings miss that the automaker blames on a surge in warranty repair costs for older vehicles. As we have been reporting, Ford down now by 17.9%. Among other automakers, Stellantis down 6.9%, GM down 4.3%. So again, recapping, stocks holding on to gains. S&P right now up 15, up 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, going through the markets. We've talked throughout the day how economically sensitive shares such as financial and industrial companies have led gains today. Smaller firms extending this month's surge to almost 10%, largely outpacing the group of tech mega caps. And if you take a look at an equal-weighted version of the S&P 500, where the likes of NVIDIA carry the same heft as Dollar Tree, just to give you an idea.
What a world.
Yep, beating the U.S. equity benchmark. So let's get back to the trade.
And the factors that really matter, like Fed policy and earnings. Back with us is Doug Sioka, CEO and partner at Kavar Capital. They've got approximately $1.25 billion in assets under management. Doug joins us once again from Leawood, Kansas. Doug, what really matters when it comes to today's investment environment? Is it anything beyond the Fed and earnings?
Oh, I think so. And great to hear both your voices, and thank you for having me on. You know, you think about like what's been happening the last 2 weeks as it relates to like earnings trends, right? Dominant sectors coming to life, tech earnings having a hard time fulfilling lofty expectations, consumer strength being stretched a bit, industrials and staples are beating and raising, and you combine that with expectations of lower rates, going back to the priority and importance of the Fed, and maybe most importantly, even or equally important, is a weaker dollar. And that's going to lead, like, I think some of this rotation / pivot / shading in the directions what kind of be commonly are mentioned, right? Smaller cap companies, like you just said on the lead in, international investments, and really reinforcing a balanced portfolio and how you're fortifying your bond portfolio.
So how much, I don't know, I'm curious what you're hearing, Doug, from clients, from investors, in this environment where I know for us in the media business, there's so much news coming at us in terms of certainly U.S. politics, but geopolitics continues as well. And it does feel like there's a fair amount of volatility in the trade, depending on the economic print of the day or maybe the Fed conversation. Although I feel like the Fed narrative is calming down and getting more kind of all on the same page. Are people looking to play it more safely at this point? Or if they've got new money to work, are they willing to take an opportunity when they see the NASDAQ 100 down more than 3%? Like, what is it?
Yeah, that's a great point, because look, if you think about like what are markets, right? They're just a manifestation of the kind of collective wisdom and emotions of their participants, right? And or maybe now they're surrogate algo bots. But uncertainty is seeming right now to trump, and that's not an intended pun, uncertainty, right? Uncertainty is trumping certainty. And so you have this manic nature that's reflecting shifting sands and heavy decision points that investors are feeling in other aspects of their lives, right? To your point, Carol, where are we with the political perspective? Where are we with the geopolitical perspective? And are we really lining up with monetary policy perspective? I mean, for crying out loud, before last night, we didn't even know we could watch the NBA next year. So like, there's just a lot of things that are being sort of...
All right, now it's getting serious. I know.
But seriously, you're right. But that you really think about this is like the preeminent environment for dollar cost averaging, particularly into sectors and parts of the market that haven't been participating, right? That have been left behind with all the excitement about tech and AI. that's left a lot of gaps and opportunities to put money to work in a very progressive fashion where you can make this volatility your friend.
So, Doug, what does work? Where should people be dollar cost averaging right now? Small caps?
Certainly small caps, but also look at yesterday, right? Not to be super dismissive, but the S&P had gone 356 consecutive trade days without a 2% drop. Longest streak since 2007. So this Mag 7 index on Bloomberg is down yesterday 12% for the July 10th high, which we got that friendly reading of CPI. And you had 4 sectors that outperformed not only the whole market, were higher on the day: healthcare, energy, staples, and utilities. So these are going to be, right, potentially the catch-up trade. And I think it's fascinating that portfolio managers are obsessed with terming the current trading patterns as a pivot or a rotation. It's mean reversion, right? It's intended to a shift in underlying monetary policy. We didn't just go through 99, right? We were not on the precipice of some kind of a dot-com-like bubble and debacle. At some point, the breadth had to widen, and I think, Tim, that's what's taking place. And those 4 sectors as beacons yesterday, I think, were very representative of that fact.
So, you know, it's interesting. I was just looking, and somebody else, I think, pointed this out on Bloomberg. You know, the S&P 500 hit a record. It was only a few weeks ago, right? July 16th. We're down about 4% from that record. Markets go up, markets go down. I mean, do you feel that prior to this, or that even markets are still a bit elevated when it comes to valuations based on what we've seen so far, about 1/3 of the S&P 500 reporting?
Yeah, and the third that is reported have come a little shy of expectations, about 6.5% year over year, but maybe only 1 to 2% quarter over quarter. But I think, Carol, the market has been so good since October of last year. Sometimes it's easy to forget that up until that pivot point on October 28th, the S&P was in a 10-11% drawdown, the NASDAQ 12 or 13, right? So you had a little refreshing pause that was very beneficial. People talk about how awesome 2023 was, and somehow completely forget that 2022 was horrible, right, from every class of asset perspective. So I do think having some of these pullbacks in the S&P, 4 or 5% if it gets a little deeper, that would make a lot of sense to us, just because you do want to stave off a more problematic air pocket into the future. So we kind of enjoy the volatility, again, from the standpoint of having these dollar cost averaging opportunities.
Yeah, we're still up 32% on the S&P 500 from that late October 2023 low.
Yeah, pretty remarkable in a relatively short period of time. All right, so you said that we have a hard time understanding where we're going to be watching NBA games in the near future. We don't know who's going to be in the White House come January of 2025. How is political risk weighing on the trade, or do you think political risk even matters?
So over long periods of time, Tim, empirically it doesn't, right? Undeniably, every bit as important as the occupant of the Oval Office is going to be the lineup congressionally speaking. What I think undermines the market any confidence that it's trying to transition through this election period would be if the election doesn't end. Right, we all went through on this call what was taking place back at the end of 2000 with the hanging chads of the Supreme Court decision in the last week of December. I think because there's such polarity across parties in the country, going back to kind of collective manifestation of the wisdom and emotions of investors, that would weigh heavily. And I think that level of uncertainty would likely cause people to maybe want to take a little bit less of an aggressive path with other aspects of their life, including investing. So to me, that would be kind of undermining to the market. Having a really nice follow through the back half of the year would just be an inconclusive outcome on election day or election month.
Hey, Doug, just quickly, got about 30 seconds here. I mean, the past few weeks, as we kidded or have been kidding this hour, that has been chock full of political news, particularly about the U.S. presidential race. How many conversations are you having with clients and investors around this? And again, just got about 30 seconds.
Yeah, a lot, Carol. I mean, it comes up quite a bit. You know, I think a big part of a job of wealth advisor is to continue to reinforce objectives and not just to say, hey, over the long term, we know things typically would end up being fine, but let's make sure we understand the consequences of activity that could be undermining to achieving our objectives. So it all kind of comes back to the context within a financial plan that we set up realistic objectives that'll calculate the amount of risk we should be taking at any point in time anywhere.
All right. Great stuff. Doug, as always, thank you so much. Doug Sioka, CEO and partner at Kavar Capital, joining us on this Thursday. As we get ready to wrap up this hour, I am thinking about you.
Why?
My colleague and co-host.
Oh, because of Chipotle? Getting more food?
Because of food.
Is that why?
Would you like to get 2 generous scoops of rice and 4 ounces of meat?
Well, let's just say Chipotle is responding to complaints. Let's just say that.
We'll get into it. That's next.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got Uber, Lyft, DoorDash, an important ruling involving those companies out of California. They can keep classifying California drivers as independent contractors after the state's top court said a company-backed law passed by voters does not wrongly curtail the legislature's power over worker protections. The ruling upholds California's Proposition 22, and it was unanimous. Uber shares little changed, up 0.1%. Lyft down 1.1%. DoorDash lower by 0.1%. Southwest Airlines is going to begin offering assigned seats, ditching that free-for-all policy that has been a defining feature of the carrier for more than half a century. The airline announced the seismic change to its business model alongside a new premium class option and plans for red-eye flights. It shifts the company and it sees boosting sales and also enhancing its appeal. While Southwest said earlier this year it was reconsidering the seating policy, it is now facing heightened pressure to revamp underperforming operations from activist investor Elliott Investment Management. Southwest shares today, they're flying higher along with the rest of the airline group. We've got Southwest 6.1%. American Airlines has slashed its earnings outlook for the quarter and the full year, making it the latest carrier to temper expectations as industry-wide fare discounting and high costs squeeze earnings. Shares of American, they're advancing now by 4.2%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Vice President Kamala Harris addressed the American Federation of Teachers National Convention. That was in Houston today. It's the vice president's second appearance since becoming the de facto Democratic presidential nominee.
From the public service workers and higher education faculty to the school bus drivers and the custodians to the school nurses and our teachers, you all do God's work educating our children.
She thanked the AFT for becoming the first union to endorse her for president. President Biden has signed into law a new bill that strengthens oversight of the Federal Bureau of Prisons. The Federal Prison Oversight Act establishes an independent ombudsman to field and investigate complaints in the wake of sexual assaults and other criminal misconduct by staff, chronic understaffing, escapes, and high-profile deaths. It also requires the Justice Department's Inspector General conduct risk-based inspections of all 122 federal prisons and provide recommendations. An advocacy group is suing New York Governor Kathy Hochul for pausing the city's traffic congestion pricing plan. They say she doesn't have the authority to do that. That plan would have charged most drivers $15 to drive into the city. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right. Thank you so much, Amy Morris in our D.C. Bureau. All right, folks, one more thing before we head out on this hour, and this has to do with Chipotle. We've been kind of kidding. We talked about...
It's not a joke.
What's that? More
portion sizes are not a joke.
Portion sizes are never a joke. Well, Chipotle apparently coming out and saying making sure all of its diners are getting generous serving sizes. So they want to make sure that they are going to put out those bigger portions to keep everybody happy. So we kind of teased earlier that we're talking about 2 generous scoops of rice, 4 ounces of meat. They want to make sure that their workers are giving them along. But you know what? Bigger portions mean what?
That means they're spending more money. The company CFO said that meeting these standards is going to cost the company an extra $50 million. But Carol, look what they're responding to. You had people complaining online and sort of doing experiments about going to different Chipotles at different times and getting different amount of food. You even had one analyst who actually went out to different Chipotles all over the New York City area and weighed and got the same order and weighed the bowls and found big discrepancies. And it turns out Chipotle was listening. And this has affected not just the company stock, not just today, but in the last few months as well.
Yeah, it's interesting. Listen, we've all been there, right? Where like somebody in front of you, they get a bowl and it's like, you know, or I'm not saying about Chipotle, but anywhere where somebody gets a bigger portion and then you come up and you're like, wait a minute, what's happening here? Like, where's my extra scoop? So there is something to consistency, right, in terms of how you are serving your customers. So that's something that they certainly seem to be taking note of. I should point out Chipotle, I mean, this is a stock that's still up about 12% so far this year, and it's been on quite a run over the last few years. But they are also, you know, I guess trying to think about whether or not do you pass this along to customers at a time when we are increasingly talking about consumers are becoming much more price sensitive.
Chipotle doing very well, though. It's one of only a handful of large restaurant chains that has consistently grown traffic in recent quarters. And the results show that most diners still see that burritos and bowls as a good deal, and limited time offers such as chicken al pastor are drawing customers in. So net, they're doing pretty well.
Yeah, the CFO, Jack Hartung, on their call saying that the company has no plans to increase prices again, or increase prices this year. But he does add that he expects avocado prices to ease by year end. So maybe some of the pressures on the cost side coming off. So
what's your go-to bowl, Carol?
I like kind of everything, some avocado, a little beef.
Okay, beef, okay.
Does that
chicken.
make sense?
Yeah.
You're a chicken kind of guy.
Chicken, throw everything else in there.
Chipotle shares down about 1%. All right, for those who are watching on TV, the close is coming your way in just a moment. Tim and I continuing on Bloomberg Business Week. Lots to come in the next couple of hours. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are just 60 minutes away from the closing bell. Definitely rolling off our highs of the session. We'll get a market check for you in just a moment. Bit of a mixed market at this hour, but just a little bit lower on the S&P and Dow. Actually, the Dow is up, a little lower on the S&P 500 than NASDAQ 100. So what?
Still seeing that rotation into small caps go with the Russell 2000 higher. I'm going to let Charlie Pellet give all the details in just a minute.
Yes.
That's Carol Massar. I'm Tim Stenevec. We got a great program coming up over the next couple of hours, including a big take from this week. It's about Roblox's pedophile problem. The internet's biggest recreation zone for kids is fighting to keep predators away, Carol, and it is not always winning.
It's an unbelievable story. Another one. We'll get to that in just a moment. We're also going to be joined by a former Tesla manager who's looking to disrupt the supply chain. So we're going to talk about software, the hardware. Basically, we're taking you into warehouses and the automation that's going on.
Yeah, and a very specific part of the supply chain too, which has to do with moving raw materials. So we're going to get into it a little later.
All right, looking forward to that. And listen, we're in the thick of summer. Tim and I actually talk about this. We were talking about it earlier. Don't forget your sunscreen, folks. We all think about it. We've got the do's and don'ts when it comes to preventing skin cancer. It's an important thing, so we'll get into that a little bit later on.
All that and more over the next 2 hours. First up, though, a check of the day's trade and top business stories. Here's Charlie.
All right, I thank you very much. And indeed, we had solid gains for the Dow, the S&P, NASDAQ. As Tim and Carol mentioned, right now we have got a mixed market with the S&P 500 index now fluctuating. We do have a 1-point gain on the S&P, 54.29, up by just under 0.1%. Going to be very interesting to see if we do close higher today after yesterday's rout. Keep it locked into Bloomberg for the very latest, and of course how Asian markets will react tonight. Dow Industrials up 233 now, up 0.6%. We've got NASDAQ lower by 10 for the NASDAQ Composite Index, down just under 0.1%. The outperformer by far, Russell 2000 Index, up now by 1.5%. 10-year 4.25%, with the 2-year 4.44%. Spot gold down 1.2%, 23.56 the ounce, and West Texas Intermediate crude up 0.8%. WTI 78.24 a barrel. Anastasia Amoroso is Chief Investment Officer at iCapital. She says part of the reason for yesterday's pullback was rooted in the economic outlook.
There's a weakening in the U.S. consumer, and there's the unemployment rate that did go up from 3.4% to 4.1%. That's not something to disregard.